There seems to be some efforts by the political regime to help hedge people against this existential crisis, but it doesn't seem like any of that's going to be very effective.
No.
What do you think is about to happen?
That is the whole entire problem, is that there's no purchasing power left in the currency. And the only thing that is holding it together is confidence, public confidence.
We have the ability to create money.
What's it take to create a buck?
Click of a button.
They have no value because they don't cost anything to create.
We print it digitally.
Yeah, and that's what's special about gold and Bitcoin, because it has a cost to produce it.
That then pushes us into a hyperinflationary depression. And that's what I see coming in the future. And that's why local community is critical. But it isn't an easy transition. And that's really my point.
And so how do we scale the global commerce like we have today with physical commodity like gold? I think Bitcoin is solving that problem.
I can see validity in what it is that you're saying. But I would also say,
all right, Lynette Zang, what an honor to be sitting here with you today. When you popped up on the schedule, I was like, wow. I remember coming across some of your work in 2017 when I started to go down the economic rabbit hole.
oh, wow.
Yes.
2017, that's actually a year after I started on YouTube. I started on the internet in 2015, went on YouTube in 2016. So you were very early. I look a little different, don't I?
No, not so much. Maybe you're getting younger, honestly. It's good energy.
It is good energy.
You're working on the right things, in my humble opinion.
Thank you.
And so I'd like to know, because I don't know a lot about you. I've heard you talk about gold and silver and sound money. How did you become a hard money advocate?
Oh, wow. That is a great question. And I have to tell you that I have been born for this moment in time. So I've been in these markets and studying them on some level, literally since I was 10 years old. And that really has to do with my Uncle Al, who was a major antique dealer, high-end antique dealer. And he was my favorite uncle, and I was his favorite. And so we spent a lot of time together. And he was really the person that taught me how hard assets move, from undervaluation to fair valuation to overvaluation to fair to under. And it's just constant. So if it's good, right, that's where you always want to buy it, somewhere in undervaluation. But what was specific and why I said 10 years old is because my parents and I were at his house one day, and he says, come on, I want to show you something. And so we went in a back bedroom where he had these 2 tall floor safes, and he opened the doors of those safes. And he said, if anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life because of what's in these safes. So of course I looked, and you couldn't fit one more $20 1 ounce gold coin in those safes. Now I was 10 at the time. That was 1964. And I didn't really understand the importance or significance of this at that time. I don't even know if my parents did, but they probably had a much better idea about what he was talking about. But you have to understand, in 1964, it was illegal in the US to hold more than 5 ounces of gold in any other way than the way that he was holding them. And I would say, knowing what I know now, that he had at least 3 monster boxes, so at least 1,500 coins in each safe. And that's probably an extraordinarily conservative guesstimate.
Wow.
And so that was really, it was one day I was writing and I said, if you were alive like I was in 1971, and then I realized the significance of that experiment, or that experience, I should say. And so that's where I really started, was with my Uncle Al. And then I definitely believe in the universe. I'm not particularly religious, but I am extremely spiritual.
Same here.
There you go. And I've led a very guided life. So my father was, it was just a small town, Kingston, New York, but he was kind of like a little bit of a bigger fish. He was a developer there. And so I started in banking when I was 15. They didn't let me go to college for what I thought I wanted to do, which was Elsa Williams School of Art in London. And they were like, a big fat no to that one. Or also there was like, well, okay, I like to cook, so I wanted to go to the Culinary Institute. That was another big fat no. But I liked banking. I liked that. So I studied business finance because that was what I thought was my only option because I was not staying home. I was leaving. So I've always worked in fields. I was in banking forever, and then I got divorced, and I had 2 small babies to raise, and I wasn't making enough money in banking. So that's when I became a stockbroker. And in that capacity, I started studying currencies because I stumbled across what is called a non-dollar denominated bond, which are just bonds that are issued in different currencies. But if I was going to position my clients into that, then I needed to understand it. And in the 80s, you could call up any head of any trading desk at Shearson and have conversation with them. And so I learned about currencies from the head of currency trading at Shearson in the 80s. And we spent about 1.5 years together. So every morning, that was my very first phone call. And we'd talk about all sorts of things. And she would give me tests. And at night, I'd go home and study. If I had not stumbled across non-dollar denominated bonds, particularly I was attracted to New Zealand, a little bit of Australia, a little bit of Canadian, but mostly New Zealand. If I had not stumbled across that, I could tell you for an absolute fact, I wouldn't know anything that I know. But I had to understand how currencies operated. And as I was studying that, what I discovered is that you see repeatable patterns. I mean, there are over 4,800 currencies that do not exist anymore. And so when you start to see these repeatable patterns, you go, isn't that interesting? And the truth of the matter is, it's like you're a lot younger than I am. I'm 70 years old. Nobody's going to look at you and think you're about to be 70. Just like nobody's going to look at me and think that I'm about to be 20 or 30 or where, you're a lot younger, right? So if we can just learn how to recognize the repeatable patterns, then we can use history as a guide for what is the next most likely outcome. And then that positions us to be in the right place at the right time with the right asset.
Wow, that is very spot on. And so in 1971, you were really well primed to understand that Nixon shock was a problem.
I cannot say. I was like, about 17? So I was old enough to be aware of the oil embargo. I mean, we had every other opposite days where you could get gas and the inflation, because I would really hear about my parents and my aunts and uncles discussing this. So I was aware enough to remember the Vietnam War, and my sister Elena was actually at Kent State, and she was billy clubbed. And that's when a couple students got shot and killed during the protests there.
Wow.
Right. So I'm so grateful to be 70 years old. I really am. It's the best time of my life. But I have all of that history that you just don't have, that perspective that you just don't have if you did not live through it.
Yes, that makes sense. And so I'm curious, how did your uncle become privy to the idea that hard money was important? Because this was pre-71. Inflation was clearly a thing, but it wasn't so much of a problem from what I understand at that time.
Correct. Well, yes and no, right? Because he was a very high-end antique dealer. So he would go into houses and they would have these gold coins that were elite. Well, they were thinking that there was nothing they could do with them. And so he would just buy them. So he's a very brilliant man. I mean, I learned a lot from him over the years, and I'm very grateful. So I don't know that he was so much about hard money as he just knew what good was. And that was a big lesson that he gave me. It's like you buy with this first, and you always buy the best quality.
Yeah, that makes sense.
Right. So of course they go in and they've got gold. I mean, people buy gold jewelry, And there are a lot of really amazing gold artifacts. Gold has been around as money for thousands and thousands of years. You knew that.
Yeah, and so was he alive in when 6102 happened? Executive Order 6102 when Eisenhower banned.
He would. Let's see. Yeah, he probably would. Yes, he would have been.
So he understood
Because
the
my
scarcity.
father, yes, and my father was born in 1910, and I think he might have been a couple of years older than him. So he was born in the early 1900s. My mother was born in 19. I'm the youngest of 7. So my mother was 40 when she had me. So yeah, they were both around during that period of time, and they certainly lived through the Depression. I remember all of the stories. So yeah, he would have been very aware of that.
Your father was born in 1910.
Mm-hmm.
So you embody an understanding of what has taken place since 1913 when the Federal Reserve was instated.
I sure am.
Oh, I wish there was more people with your wisdom and experience.
I'm trying to pass it on.
Yeah, I'm all ears. Wow. And so, not to jump forward too much, but obviously we're in a period of time where there's fiscal irresponsibility. Inflation is a real issue. We're detached from gold. We got this free floating currency. We have this Keynesian economic model with a debt-based inflationary monetary system. It seems that we have a runaway train. The rate of inflation looks like it's going to have to increase potentially exponentially.
Mm-hmm.
What are your thoughts with, all of your understanding of like, what do you think is about to happen? Because, at times, I wonder if there's ways that the government can continue to manipulate things, put in capital controls. Trump is talking about now, I forget the specifics, but he wants to give $1,000 to people born after a certain period of time. So they got a little stock portfolio. So there seems to be some efforts by the political regime to help hedge people against this existential crisis. But it doesn't seem like any of that's going to be very effective.
No.
Yeah.
It won't be. And really what people don't understand, do you ever go on the Federal Reserve Education Department, Fred, those charts that I use all the time?
I see them posted on Twitter and a lot of people reference them in videos, but no, not personally.
I'm telling you, go on there because I think you get a certain level of honesty there that you don't get if you don't look. And my very, very favorite chart, and I like my charts and graphs, but if they said you could only work with one, the one that I would work with is the purchasing power of the consumer dollar. So when you ask me, what's likely to happen, when you look on that graph,
which is not CPI.
No.
Okay.
But it's kind of reflective of that, right?
Okay.
It really is. And people don't make those connections either. But the CPI being inflation, and that is the loss of purchasing power.
But extremely manipulated.
All of it is. However, if you look on that graph, what you're going to see is on the left-hand axis, it's 1,000. So you move the decimal points 3 places, and that gives you your $1. And you'll see that that's where the purchasing power started. And officially, we have 3 cents left. But that whole chart really tells the entire story of the birth of the Federal Reserve, because all the documentation, and if you want any of these images or links, you let me know and we will get them to you because I am a database decision maker. But when they instituted the Federal Reserve and legalized them, a 20th of an ounce of gold, which is teeny, teeny, tiny, used to back $1. Then in 1913, that same 20th of an ounce of gold then backed $2.40. So you could see a massive 50% drop in purchasing power as they were kicking everything off. But that's also what led to the roaring 20s, where then people were given credit for the normal public for the first time ever. They started to transition us into a consumer-driven economy. But this is how one of the things that they do 100% of the time is they allow the public to think that they're winning. They allow the public to think that this is all of this money. And what also happens is when you go extreme and then you get a little bit of purchasing power back, and you have like a lot of extra cash in your pocket, you think everything is going back to normal. It never does, right? That's your perception, and that's a perception management. But the advantage of being around in the 70s and then into the 80s is I remember the greedy 80s. And I remember all of the inflation, all of the problems. And now, by the way, and not an independent Fed, with the Fed chair Burns during Nixon's reign. And so we're going back into that period now where the central bank is an overt tool of the government and the monetary policy. So we're entering that phase right now.
What does that mean, an overt tool?
Well, okay. Personally, and I can't prove this, so as I said, I'm a database decision maker, so I let you know when it's just my opinion or when I have the hard data. I don't really consider central banks being completely independent. So that's what I mean. So that would be a covert tool, hidden, just like confiscation. Now, outright confiscation, where they come and take it away from you, that's overt.
Gotcha.
But inflation, taxation, market manipulation are all forms of confiscation. They use different words. So that is covert.
In terms of like quantitative easing, I remember the first time I heard that, I'm like, well, excuse my language, but yeah, it's like, it's a...
You're proving my point, my darling. You are proving my
it's so
point.
frustrating. I'm just, we're all just living in this reality, trying to make sure that we're not stolen from, lied to, poor. We just want to, take care of our families. And it's so confusing, and it can be very frustrating.
But you do know, their words, not mine. If we make this really complicated, nobody will question us. Because people, when it comes to money, how comfortable is it to talk about money?
Pretty uncomfortable, which is interesting because it's, someone said, Jack Mallers, he's the CEO of Strike. I like his explanation of money. He says it's your time and energy in an abstracted form. And so we're going to the marketplace, we're exerting energy, we're providing some good or service. And if we're, trying to project our energy into the future, we have to save it in something. And in this modern era with this economic paradigm that we're grappling with, most people, even though they don't know it, they're becoming their own independent mini hedge fund managers or interest rate arbitrage specialists. Like, hey, I got a 3% mortgage, but I'm not going to pay that off faster, and I'm going to buy some S&P. And then the people who take the sound money principles, the idea of just saving money and getting out of debt, those people, unfortunately, they suffer because...
Well, because the money's not sound.
Right.
And that is 100% by design. We have to take our power back. But yeah, when they were creating the system, they actually said that if people are forced to work harder to maintain a certain standard of living, they will have less time to pay attention to what we are doing. And let me tell you, I didn't bring all of my props with me because, I like my props as well, but they know how to make these transitions. So back in the early part of this experiment, you had the $20 gold coin and you had a $20 gold certificate because, hey, these are so heavy to carry these coins around in your pocket.
And what year was this?
The early 1900s, okay. 1913 going really up until 1933. So you had first you had the gold coin, then you had the gold certificate, which is a bill, looks like a $20 bill, except it's got a little gold thing and it says gold is held in the depository. So that means that you could walk in with one and walk out with the other. And they also floated the Federal Reserve note at the same time, at the same level of stated purchasing power. So all of those were $20. And people had 20 years between 1913 and 1933 to get used to that $20 bill. That made them think that this is just the same as the gold, just the same as the gold certificate. So when they took the gold out of the system away from the public, not to the foreign countries, but to the public, people didn't think that anything had changed, when in reality, everything had changed. The public had given up their power over the government. Because if you did not, prior to that, if you didn't like what the central bank or the government was doing, you would simply walk in with a gold certificate and walk out with a $20 gold piece, an ounce of gold. And what gold does is it forces fiscal responsibility. So that's when the public really had their power, because if you didn't like it, you'd take the gold out of the system, and that would create restrictions around what the government could do. So they had to get the gold away from the public. But if they had just gone in and done that overnight, then you'd know about it. And you'd go, no, that's not going to happen. They like time and distance between their choices, between government choices and central bank choices, and when it's introduced to the public. Now, I brought you the quarter card.
Yes.
Right? So I'm going to fast forward to 1965, which is when President Johnson took the silver out of the system.
I don't know anything about this. This is fascinating.
Exactly. I lift weights, and my trainer is an attorney turned gym owner. So he's a pretty bright guy, and I've been going to him for years and years. We've had lots of interesting conversations. He's definitely knows a lot about history. And one day we started talking about silver, and he said this, and he's in his 40s. I think he's 42 or 43, something like that. And I said something about silver being in the monetary system, and he goes, "It was? I didn't know that." That was eye-opening to me, because here's somebody that I've had God knows how many conversations with that I do think of as a very bright person, and he did not know that. And that's where the quarter card came from. Because how can I suggest that people put sound money in their hands? They don't even know what sound money is. So I'd like to explain that in a second, let alone they've never held sound money. So sound money is money that is above all governments and all central banks. And it's that way because both gold and silver have properties that they have never figured out how to duplicate in a lab. And so both of those assets, commodities, are used in every single sector of the global economy. What does that mean? That means that they have the broadest base of functionality. They do all these different things. And therefore, what a concept, the broadest base of demand. So if demand goes down over here, it's going up over here. That's why gold and silver have never, ever, ever, thousands and thousands of years, never gone to zero, because they're used everywhere. And here's something, because I know you're big on Bitcoin, and that's okay. I've been watching it since it was $7 a coin. But here's a big difference between them. I brought my image of a Bitcoin because there is no image. It's an algorithm, right? It's a formula. So they had to create something so that people would think that it was something. And you tell me how much these two look alike.
Very similar. Yeah.
Why? Why are cryptocurrencies depicted as mostly gold or silver or platinum? Why aren't they green or orange or red or any other color? It's because this is in our DNA. Gold and silver are in our DNA. Now, we've been trained away from them, but here's the big difference. It takes labor and energy to mine these. But then, particularly with gold, which is the primary currency metal, it's indestructible, which means that in any form, it can be melted down, changed around, and used in every single sector of the global economy. So this energy gets to be used over again and again and again and again and again. This takes energy, but you can't reuse that energy.
Okay.
It doesn't hold it. Does that make sense?
Yeah, well, I think of what Michael Saylor speaks to a lot in that Bitcoin, because of the mining process, because it takes harnessing of electricity to produce the Bitcoin, proof of work. That's
Mhm.
why they call it mining. It's digitizing, this is Saylor's words, and I might not get it exactly right, but you're effectively digitizing that energy. And then you're trading that energy for a good or a service or a currency or whatever, so that you're swapping energy for energy. So it's referred to as digital energy. And I will say, here at the What is Money show, we are Bitcoin advocates, not anti-gold or silver by any means.
Right. And I'm not anti-cryptos. I'm just saying
Well,
be intelligent, right? And make sure you're properly diversified.
yeah, well, I'm anti-crypto. I'm only an advocate of Bitcoin. All the other cryptocurrencies, I think that they are solutions looking for a problem at best or scams at worst. And I think most of them are flat out scams.
I think so too.
They're pre-mined, they're being dumped on people. They pay celebrities and people to promote them. And it's typically insiders who had access to the pre-mined or a pre-release, whatever. And so cryptos are most often pump and dumps, and Bitcoin is referred to as a pump because nobody can control the Bitcoin supply. There was no pre-mine. Satoshi started mining coins. Those coins have never moved. Michael Saylor refers to Bitcoin as a gift to humanity that Satoshi left us with. It's referred to as the only digital commodity. The rest are either replications of that, which the market is going to typically has chosen, quite literally, Bitcoin as the true scarce digital monetary instrument, and replications of Bitcoin, like other proof of work coins, don't seem to have, well, they quite literally don't have the market share. And so being referred to as like the discovery of scarcity, we're not going to discover that twice due to the finite supply of Bitcoin. Go ahead.
Well, I was going to ask you, because you said then that you view it as a transition of energy, which I totally understand because of gold. But how does that energy be? I'm trying to learn too, because we need to be open to everything, right?
Yes.
iCoin Technology has released a slick new hardware wallet. It looks like a mini iPhone with a high-res 3-inch touchscreen and camera on it. The device has no Wi-Fi, no cellular connection, and no GPS. It is an air-gapped hardware wallet which uses QR codes and a camera to communicate with the Bitcoin network. It has a built-in camera which is required for air-gap operation, and it has an optional Bluetooth compatibility. It's really a brand new user interface and user experience for a Bitcoin hardware wallet. iCoin makes self-custody accessible, easy to use, and non-intimidating. It even comes with an optional custom iCoin thermal printer, so you can print out the private key and its associated QR code when you're setting up the wallet. This makes setup quick and simple. Also, it is easy to restore the wallet just by reading the seed phrase QR code with the wallet camera. And as we always talk about on this show, the only way you can truly own your Bitcoin is by having it in self-custody. So you need a device like the iCoin wallet to truly own your Bitcoin. So go to iCointechnology.com/breedlove today for 30% off the purchase of this sleek new hardware wallet. Again, that's iCointechnology.com/breedlove. If you're anything like me, you understand that Bitcoin is something we can use every day to connect, to collaborate, and to build stronger, freer communities. As true Bitcoiners, you all know we are each responsible for onboarding more Bitcoiners. That's why I chose to partner with Cowbolt, an expense splitting app that settles in Bitcoin. It can be as simple as splitting a dinner bill. Your friend covers dinner and you reimburse them, but you send it back to him in Bitcoin. Now your friend has their first sats. And as I always say, where your money goes, the mind follows. By using Cowbolt to get Bitcoin into the hands of your friends and family, you can help us orange pill the world. Cowbolt is built to let you split costs, share expenses, and settle instantly, while always keeping full control of your keys. Cowbolt is simple, social, non-custodial, exactly how Bitcoin was meant to be used. If you're serious about Bitcoin, it's time to act like it. Download Cowbolt today on iOS or Android. To learn more, go to cowbolt.com. Again, that's Cowbolt, COWBOLT.com.
And so, certainly you know more about Bitcoin than I do, although I've been paying attention to it for, all these really since about 2010. So it was $7 a coin, something like that. So how does that transfer of energy compare to this transfer of energy?
Not exactly sure, but I guess what comes to mind is that Bitcoin. So I think of a Peter Schiff kind of dialogue here, where he refers to Bitcoin as having no intrinsic value. And what I hear when he says that it has no utility value or more so no industrial value. It's purely monetary. And
right.
What I think is
I would agree with. That's kind of how I'm thinking of it.
Or
as
gold,
well.
You could use gold to wrap a spaceship, protect it from radiation. You could jewelry, electronics. So gold has two value propositions, or it's doing two things.
Many value because it depends on the industry.
Okay, that makes sense.
Right.
But it's doing two things at one time. It serves as a monetary instrument as well as an industrial metal.
Absolutely.
And with Bitcoin is purely monetary. It has no industrial use case. The industry around Bitcoin mining is effectively incentivizing our civilization to figure out how to harness cheaper electricity and to build faster computing devices. Because of the way the mining reward is designed, as more miners come online and the hash rate increases, there's something referred to as the difficulty adjustment, which effectively locks the Bitcoin in time. If every power plant on planet Earth and every human on planet Earth today plugged in a Bitcoin miner, what would happen is the blocks getting written onto the public ledger, and I might not be saying this exactly right, but generally this is how it works. As the blocks start coming in faster, the hashing algorithm is going to make the numerical string of letters and numbers larger so that it's harder to guess that number, get the mining reward, get paid the transaction fees, and then get the new issuance of Bitcoin. In the digital age and with the global economy that we are living in today, what is very unique and a first for human history is Bitcoin is the first thing that's informational or invisible that gets moved as a bearer instrument. You give me that gold coin, it leaves your possession, it goes into mine. It's 100,000 years ago, and let's say we're cave people, and I tell you, hey, there's a fishing hole down there, there's a river, you can procure some fish, and you can pick some berries in this patch or whatever. I look at that as like a data packet. I give you that information, but I also maintain a copy of it. And so what Satoshi did, and what is a first is he created something that's informational. That's a bearer instrument. I send you Bitcoin, it leaves my possession, it goes to yours. And what a lot of the Bitcoiners, including myself, think is so special about Bitcoin. And now I'm not anti-gold by any means.
Right.
But what's so special about Bitcoin is it's in the world in which we live in today, in order for the economy to scale globally, you can't send gold across the seas. Let's say I wanted to go buy a villa in Italy.
And let's hold on to that thought because we need to talk about that in a minute. But go ahead.
So if I wanted to buy a villa in Italy, let's say I lived in London and I wanted to go to Italy and buy a villa, if I take a covered wagon with gold, some bandits can prick me and they can get the gold, which is why we ended up, at least from my understanding, with a derivative system, gold-backed certificates, right? And so how do we scale the global economy or maintain global commerce like we have today with a physical commodity like gold? And I think Bitcoin is solving that problem where you don't need that derivative system the same way that you do with gold for global commerce.
Well, I can see validity in what it is that you're saying, but I would also say that there are ways to manage that wealth because I do travel and I don't take a very expensive coin, honestly, with me when I travel. But I can take a coin that can hold many, many millions of dollars. Not that I put any value in dollars, because I really don't. I'm sure I think differently about money than anybody else you're ever going to talk to because of where I live my life. But I travel with this all the time, all over the world, and nobody ever asks me about it. So this is universal money because I can go to Italy if I want to buy that villa there, and I can simply convert this into whatever the currency is. So I see a place for both. I'm not saying one or the other, but I am saying that we have to be smart about it because I guess where I don't necessarily agree with you in his level of the ability not to manipulate it. Okay. That's really where the utility issue for me is kind of huge.
In what sense?
Well, I don't see, I can easily see the utility in this, right?
So you mean
because again, it holds the energy and you use it all over the place.
Yeah.
Whereas to your earlier point, this is in one place. So as long as that demand does not break down, you're okay. But I guess where I'm having a challenge is what else can you convert this into? Because its volatility is pretty extreme, right?
Yeah. On average to the upside, but yes.
Well, overall, because my feeling always was that this is a Trojan horse, right? I do not think
from the powers that be into the public.
Yeah.
Okay.
Because I read the 1996 NSA white paper on how to create a mint. And I read the peer review smart paper on smart contracts. And it's awful familiar. So when this came out, I didn't read it before it came out. I'll be honest with you. It wasn't on my radar. But I did read it shortly after it came out. And I just don't think that it's a coincidence that it happened to come out on January of 2009, and quantitative easing, which is just massive free money, came out in March of 2009.
Okay.
And I started watching it in 2000, and I think it was 10. It was pretty early in the game.
Yeah.
And I went, So I see the need for it. I see the need for a new system. And so the battle is, whatever that new system is, I want a component of sound money in it.
100%.
So it's going to be digital, 40%. Doesn't have to be 100%, 40%, but also it must be redeemable. In other words, I want the public to take their power back. And the only way that you can take your power back is if you actually have a tool, because if you think voting is it, there's this bridge in Brooklyn.
Yeah, vote harder.
Right.
Yeah.
I mean, it doesn't mean anything. But if you have a tool that will enable you to hold your politicians that you elected toes to the fire, that's what I want. That's what I'm fighting for. And I got to be honest with you, in all the years that I have been doing this, I'm getting chills. This is the absolute best opportunity that I've seen to potentially make that happen. And so, yeah, and President Trump is part of that. He is a disruptor. That's what he is. That's what his job is. And he's been known to accept gold for payment of leases and different things. So he is definitely a crypto advocate, but he's also a gold advocate. So that's what our fight is. That's why we have those quarter cards to get sound money. Hold it, right? It feels different. It feels completely different in your hand when you hold fake money and you hold sound money. So the other challenge, if Bitcoin or any of them are used in one place, if that demand goes away, what happens? Whereas this is used in every place. So a properly diversified portfolio identifies,
Not of stocks and bonds.
well, look, I'm an ex-stockbroker and I
Yeah.
don't own any of that garbage
Mhm.
because I am so crystal clear on what is happening to the underlying currency. That has certainly not always been true. And it certainly will not always be true into the future. But this is where I've lived my life. And I would say the same thing with Bitcoin. You know, I mean, people could say, well, you're stupid. You've been watching it since $7 and look at it now. But again, I probably think differently about money than anybody else you will ever talk to. And if there's what's the real trend? And I guess this is my point. What is the real trend? It's not Bitcoin going up. It's not stocks going up. It's not real estate going up. It's the dollar losing all of its purchasing power. That's the real trend. And like you said, no, you don't really go on the Fred very often or wherever. Well, then how, other than inflation, and you certainly know that it costs you more and more dollars to buy the same goods and services that you've been buying right along.
They're actually becoming much more abundant. Goods and services, the supply of goods and services is increasing. And in gold terms, it's going down in value significantly over the last 100 years, but it's going up denominated in dollars. Clearly a problem.
That is the problem. That is the whole entire problem, is that there's no purchasing power left in the currency. And the only thing that is holding it together, and this is also what supports everything else, is confidence, public confidence, right? And there are layers of confidence that I've been watching go away. For example, 2008, this crisis happened. Banks stopped lending to each other. That's interbank lending. They don't even report on it anymore, right? So that was the first layer of confidence that went, boom, gone, bank to bank confidence. In 2015, with the Swiss surprise, so I can get into any detail that you want, but just to kind of keep it as an overview, in 2015, the Swiss central bank had held the Swiss franc to peg the Swiss franc to the euro dollar. And there's lots of reasons which we can get into if you want to. But that means that whatever the ECB did, Switzerland's central bank had to do the same thing policy-wise. And that kept them together. So the Swiss was saying, that is our most important thing. That is our most important thing. That is our most important thing. And 2 days after they came out and said, absolutely, we are maintaining that peg no matter what, they broke the peg. So that was central bank to central bank confidence is now gone. And you might recall that it was quite synchronized up until from 2008 until actually pretty recently. So central bank to central bank confidence gone. Now central banks know each one will do what they got to do. Then the next level of confidence were the markets, right? Because since 2008, what the central banks were using for Wall Street was forward guidance. Okay, guys, banks, this is what we're going to do. Now you have enough time to get in position to take advantage of it. So the central banks would say jump and all the banks would say how high and rock and roll hoochie coo. But when they had dropped those interest rates all the way down to zero, ZIRP, zero interest rate policy in this country, and negative rate policy in other countries, that was a test to see, would the public, how would that work? Could we inspire people to spend because we're a consumer-driven economy? Take on debt, spend that money. That's how money's created in this system. But when it was the markets and they kept saying, oh, we're just going to raise, so going back to 22, we're just going to raise interest rates 50 basis points, 50 basis points, 50 basis points. And then bam, they shocked the markets with a 75 basis point move, which may not seem like all that much, but it's that confidence piece. It's not the numbers. It's the confidence, because between 2008 and 2022, they'd say, this is what we're going to do. Banks would get into position to benefit from it. Now that was gone. I was shocked, absolutely shocked when they did that, because that confidence is really the only thing holding this whole fiat money system together, this whole debt-based system together. So there's only one level of confidence left, and that's public confidence in the currency, in those in power. And when we lose that, because that's been testing all-time lows, that confidence level. So that is something, well, they pay attention to it a lot because it's all about expectations and confidence, right? They got to manage those. That's the government's and the central bank's job, is to manage that public confidence, those expectations. So what happens when that goes away? Because when it breaks that support level on the bottom, which it's kissing, that's it. And I mean, there are just different technical things that I'm looking at, and I'm fully prepared to put my technical neck on the line and tell you that there is not one little doubt in my mind, but we have already entered the phase of hyperinflation. And I say that because of what's happening to the monetary velocity. And that's the speed at which money changes hands. And that's an indication of how people feel about the value in their currency. And so again, if you go in and you just put M2V back in the Fred, FRED, anybody can do it. I don't have privy to any information that you don't have or anybody else out there that's listening or watching has. Go into that site. You'll look at the money supply, which they took the broadest base away from that in 2006 because why do we need to know how much money they're creating? So it's just the M2.
So that's why M2 is not actually, in your opinion, a good metric to see the debasement.
Oh, correct.
Okay.
But I don't really think that anything that the central bank is going to tell me is honest. But since very few people go in there, I think it's a little bit more honest. And really go in there and play, because it looks like after the big drop off of purchasing power, it's sort of leveled out, but it's all in perspective because you're looking at over 100 years, right? You can shorten that time frame. Look at what it's done in a year. Look at what it's done since 2008. Look at what it's done since 1970. Heck, you know what's really fun? Put your birthday in. Look at how much they have stolen from you covertly since the day you were born.
I have not done that.
It's eye-opening.
So I was born in 84.
Okay. You're 3 years younger than my children. They were born in 81.
Years old. So do you know just generally off the top of your head how much how much purchasing power the dollar has lost in the last 40 years?
Oh yeah, it's lost about 97, 98%.
Wow.
And so my question, and I ask this to some very, very brilliant people that I have a lot of respect and have learned a lot from over the years. And I'll say to them, so what happens when we get to zero? And they just look at me. And most of the time, this is the kind of response. Oh, yeah. Yeah. We know about that. We just don't pay attention to it. Well, that's the problem.
Yeah. Bury your head in the sand, huh?
Right. Well, because they don't know.
Mm-hmm.
Honestly, the only reason I know, I mean, I feel quite guided, right? Because how did I happen to stumble? I don't even remember how I stumbled across it. But what I found was a 5-year piece of paper, AAA rated, happened to be McDonald's. Probably wouldn't do that today, but back in the 80s, I didn't necessarily know any better. But it was a 5-year AAA rated piece of paper at 12.75% interest. And then at that time, treasuries, I think, were paying something like 8%, 8.5%, something like that.
You're referring to a McDonald's corporate bond?
Correct.
Okay.
In New Zealand.
Okay.
A New Zealand corporate bond, right? And so that bond would pay in terms of New Zealand dollars. And then those New Zealand dollars were then translated into US dollars. We were making like 25, 28% on those bonds.
Wow.
5-year piece of AAA rated paper. That's why I was attracted to it, because it was paying so much more. Now, of course, by the time I finished working with them, I guess Wall Street saw how much more money the clients were getting, and then they put them all in a mutual fund, and you didn't even see nearly those kinds of returns because obviously Wall Street wants to keep most of them. Because I know I put my mother in one of those mutual funds when we couldn't do any more individual ones, and she was lucky to get 8%.
Wow. This is fun. I'm really grateful to be doing this and having
Actually,
this conversation with you. Yeah. So I'm curious.
Mhm.
You're saying that when the velocity of the currency increases, it's an indicator that we're experiencing more inflation.
Yes, and it is also an indicator of that loss of confidence because people are anticipating that things are going to cost more. So just like hyperinflation, when you get the money, you go out and you spend it as quickly as you can because it's very clear how quickly it's losing value.
Yeah.
It was interesting. And I'm just going to talk about this definition. And I don't want to go into too much detail why I think this is so interesting. But what is the central bank's definition of price stability? What would you think that would be? What's price stability to you?
The first thing that comes to my mind is CPI, but as I'm saying that, I'm thinking that can't be the case.
No, because price stability, I think most people would think that gallon of milk just keeps costing the same amount, right?
Actually,
that loaf of bread keeps costing the same amount. It's a stable price.
Yeah, so I don't know what the definition would be, but what I do think is that, and tell me where my thinking is off, because I don't know that I've heard anybody say this. I probably have, but I've had this thought. If the government could get away with debasing the currency supply by 2% a year, and the goods and services are increasing at 2% a year, then you're fundamentally keeping prices stable. And I think the gold supply, as my understanding, on average has increased by 2% a year. So if you have gold's supply increasing by 2% a year, and this can be compounding, and you have a gold-backed currency, and that is increasing by 2% a year, and the goods and services is increasing by 2% a year, then prices on average across the board would stay the same. You would have that price stability. So there are times I've wondered if that was like the fundamental idea behind the design, which is effectively siphoning the productivity gains out of the marketplace. Because if the currency supply or the gold supply was fixed, then the purchasing power of the gold would increase at a faster rate. And especially in today's era where innovation, AI, technology, we're increasing the goods and services at a faster and faster and faster rate, which would create deflation, where the money is actually going to purchase you more goods and services on average going, forward, which is part of like the great thesis around with Bitcoin is once we hit 21 million coins, we're making more of literally everything else on planet Earth than we're making Bitcoin. It's a fixed supply asset. So Bitcoin's convertibility into any other good or service in the marketplace is going to increase. Your purchasing power is going to increase in the Bitcoin. And there's a famous quote that I absolutely just love so much from Jeff Booth, where you have abundance in money, you create scarcity in everything else. The money is really crappy. It's losing its purchasing power too fast. And whether people are in full understanding of what's happening, they intuitively know, like I think in Venezuela, people get paid. They immediately get out of the currency and into anything else that can push that economic energy or that value into the future more effective. You're going to buy your groceries. I met a person in El Salvador last year that was from Malawi. Malawi has hyperinflation or some level of inflation that's so problematic that people are using goats as a store of value. They're fungible, they're portable, and so on. And so where you have scarcity in money, you create abundance in everything else. So that is maybe hyperbolic, but one of the things I love about Booth's work is he has these little zingers or quotes that if you unpack them, there's so much depth and meaning to them. And so for me as example, I like to think that because I don't own any real estate, I own Bitcoin. The fact that I own Bitcoin and don't own any real estate, and it might be infinitesimal, but that is not, it's downward price pressure on real estate. There's less demand relative to the supply. So I'm holding the money instead of all these other things to store my value in. So where you have scarcity in money, I'm creating the abundance. And as more and more people do that, the money is getting more powerful. And the value of these other things that have become monetized, they're being demonetized and their value is falling to their utility value. And during the great golden age, I would assume, and maybe you could help me to understand this, people weren't going and buying multiple apartment buildings. They weren't buying trophy real estate just as a store of value. They were just holding the money because the money's increasing in its purchasing power on average faster than these other assets, you call them, that people are now using to preserve their economic energy or their value.
Well, I wish I had a pad because you were saying a whole bunch of things that I would like to unpack, but I can't remember all of them. But that was really, so first of all, let me say that the level of gold production has matched the level of increase in population over a very long period of time.
Do you know what that number is?
I don't know what that number is exactly.
It's okay.
But I know that it matches, right?
Mm-hmm.
However, there is a finite amount of gold, whether it's in the ground or it's above ground. And again, I have to go back to its full utility. And I also have to tell you that, thousands of years have proven that gold is above all those governments and central banks, but it is, according to the Bank for International Settlements, the only financial asset that runs no counterparty risk.
Yes.
Okay, so that's
well, now
key.
Bitcoin is said to have that same value.
But that hasn't been proven yet. Okay, Bitcoin's only been out since 2009. That test is coming up. Let me tell you, everything gets tested, all this new stuff, because again, when they're trying to switch into a new system, they need to get normalcy, right? They need to get acceptance. And the way that they do it is to allow these things to run. Now you have a huge advocate in the current administration, right? So that's going to push it into that realm, but it has not yet been tested. Gold has been tested for thousands of years. And so going back, which we are not experiencing on Wall Street, right? You're never going to see Wall Street give you a proper supply and demand dynamic because it's all contracts. And everything has been turned into a financial product for trading. So I always go to discovering, and this goes back to what you were saying, it's just a different way of approaching it to understand what its true fundamental value is. You brought up intrinsic value. Intrinsic value is market value. And so however they're going to price it, however the market's going to trade it, whatever, that's its intrinsic value. Fundamental value goes back much further to, you need to, number one, there's a little bit of nuance in here, but you can do this for every single flipping asset and should, because the fundamental value, I can't give you a whole lot of guarantees, but I can guarantee this one. Thank you, Uncle Al. I can guarantee this one. At some point, all assets, all instruments go to their fundamental value. So if you do not know what that number truly is, then how do you ever know if something is undervalued, fairly valued, or overvalued? Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? Right? So anything that is intangible, like your stocks and bonds, and I'm sorry, until you can convert it into a lot of other things, that would be true for Bitcoin or any of the cryptocurrencies. If all you can do is convert it into the fiat money, the government money, then that's the real trend. And the bottom line is they're going away, period. But with gold, well, how's money created in this system? How is it that the dollar that I can sit here and I could tell you 100%, not one doubt, plus it's already been doing it, that the true value of a dollar is zero, right? What's it take to create a buck?
Click of a button.
Uh-huh.
At a single node database at the Federal Reserve.
Exactly.
And nobody can audit. And that's never been audited.
Correct. But what they report is that it costs, and I could be off a little bit by this, but I'll be pretty close. It costs 3.2 cents to create $1. It takes 9.4 cents to create $100. Now, you and I have to work a lot harder for that $100, but it doesn't cost anything to create it. And whatever is digital costs even less than that, right? So the more dollars they create, the less value they have, but they have no value because they don't cost anything to create. This is not rocket science.
Yeah, and that's what's special about gold and Bitcoin, because it has a cost to produce it. There is a cost to get the gold out of the ground, and there is an energy cost to mine the Bitcoin. So if we move forward and go back to a gold standard, how does that look to you? Because one of the challenges that I see is that we do have to have a derivative system on top of gold. If we have a gold-backed currency, we're trusting a central bank or a gold custodian of some sorts to be honest about how much gold they have on reserve relative to the certificate in whatever form is in, what that backing is.
That's why it has to be redeemable.
Yeah.
That's exactly, because you can take a look at Zimbabwe, which I've been following since 2006. They are now on their 6th iteration of a fiat money. And this last one, Zim Gold, because it's 40% backed by gold, but it never was in anything other than digital form. And you could not redeem the gold out of the money. So they came out with it in April of 2024. And then they did a 44% overnight revaluation in October of 2024. So exactly to your point, I agree with that 100 bazillion %. But if it's redeemable, the likelihood of 100% of the people going in and redeeming it at once, that's a bank run.
Right.
Right?
How do we prevent sociopathic overlords from colluding with banks and creating things such as bank holidays to prevent that bank run from happening? Because the way I think about what's happened historically is essentially that has happened. And so you can't expose the dishonest market participant, the gold custodian that is got out over their skis and issued more of a derivative than they have underlying asset on reserve.
I mean, that's the whole fractional reserve system. But what you do is you hold it.
Right.
If you don't hold it, you legally do not own it. And it really is just that simple. So yes, if it's redeemable, then that holds their toes to the fire if you have the ability to do that. To your point, we did it here. We did it first with the public in 33 and then with the rest of the world in 71. Because there was a run. You know what? You might not know this, but again, if you want any of these images or the links or anything like that, you let me know. I'll get them to you. But there was a run on the dollar in the 60s with foreign governments sending in dollars and pulling the gold out of the system. So that by the time that Nixon closed that gold window, which sounds like, no big deal. It was a very big deal. But by the time he did it, we had less gold in our coffers than we did prior to the confiscation in 33. Had he not done that, we would have no gold. And that kind of takes us to Fort Knox with all of these conversations about doing an audit, and then it went dead silent. Why did it go dead silent?
Seems to me that the United States government was being dishonest about how much gold they had.
They would never do such a thing. Oh my gosh.
Forget multivitamins and other supplements. Animal organs are the most nutrient-dense foods on the planet. You can get 100 times more nutrients from organs than you can from muscle meats. But the problem with eating organs is that they are difficult to find in stores, they are difficult to prepare, and even when they are prepared well, they often don't taste great. Thankfully, Heart and Soil Supplements has made consuming organ meats so much easier by providing powderized organs in capsule form. Organ meats include everything your body needs to thrive: vitamins, minerals, peptides, proteins, and growth factors. This is why organ meats were the most prized foods for our ancestors. Fortunately for us, Heart and Soil makes these treasured foods easily accessible. So go to heartandsoil.co today and use discount code BREEDLOVE to get started on your journey to optimal health and vitality. Again, that's heartandsoil.co, discount code BREEDLOVE. Would you rather have 1 Bitcoin today or 2 Bitcoin a few years from now? Bitcoin mining is a tried and true strategy for accumulating Bitcoin. Over a 2 to 4 year time frame, successful miners have consistently accumulated more Bitcoin than they otherwise would with a traditional dollar cost average strategy. Blockware mining as a service enables you to start mining Bitcoin from your laptop. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. Plus, with Blockware's one-of-a-kind mining marketplace, you can buy and sell live Bitcoin miners with just a few keystrokes. In this marketplace, buyers get to purchase live machines at vetted facilities, enabling them to mine with zero lead time. And sellers get the opportunity to liquidate their machines and hosting contracts at will. This means you can mine Bitcoin with zero long-term commitment and high liquidity on your mining rigs. Blockware will even cover your energy bill for 1 week per mining rig when you sign up at mining.blockwaresolutions.com/breedlove. Again, that's 1 free week of Bitcoin mining at mining.blockwaresolutions.com/breedlove. And on top of this offer, you can also use code BREEDLOVE to get $100 off your first mining rig with Blockware Solutions.
The supply of Bitcoin is auditable every 10 minutes by computers all over the world. And some of the Bitcoiners, including myself, like that because you can't audit the supply of dollars, gold. Very difficult to do so. And you were mentioning, I forget how you put it, but effectively like the market value of anything is going to be
Oh, yeah. We were
it's
talking
intrinsic
about
value or
No.
fundamental value.
It's ultimately, once the markets, there will come a point, because in markets, it's all about confidence, right? So when the public loses confidence in the currency, in those that are in power, right? Which we're super close to. I can't tell you exactly the moment, but we're very, very close to that. That's when the government is attempting to regain public confidence, that's when you will see gold go to its fundamental value. How do you know what that number is? Well, it's really simple. Since fiat is money, fiat is the definition is by decree. So that's government money that says, here, this is worth $100, even though it costs them nothing to make. But hey, this is $100. When that public confidence is lost and they're attempting to regain it, which is what was happening in Zimbabwe, but it's too far gone, then they do an overnight revaluation and they do it against gold. That's why you see global central banks accumulating more gold than they ever had since tracking has begun, and especially in the last 4 years. Tremendous. Actually, they started in 2005. Because when they do that, whoever holds the gold, this is about freedom outside of the system. So how do you know what that number is? Okay, how's money created? Debt. So you take I do this globally because this isn't just a US issue, this is a global issue. So you take all the debt that they have grown, because that's a proxy for how much fiat money is out there. And then you take how much gold exists in the world since it's indestructible, right?
How's that measured?
Ounces or grams.
Okay.
It kind of depends on where you are.
So we have to take the word of the gold custodians and how much they have on reserve.
Well, we know how much has been pulled out of the ground. Like it's not just coins or bars. It's any form at all. So we know how much has been pulled out of the ground. And then, we got to take the word of the Department for the Interior. But actually, it doesn't really matter, because anything that's physical, anything, it can be lumber, it can be bottles of water, it can be gold, it doesn't matter. Anything that's physical, there is a finite amount. And you simply divide all of the debt. I'm making it super simple for most people to understand, right? You just take all the debt, you divide it by all the gold that has ever been mined and is yet in the ground, according to the Department of the Interior, and that gets you somewhere around $40,000. Now, that is today, if they were to do that overnight reset on a one-to-one basis. By the time they actually do that reset, it could be $3 trillion. But understand the dollar has no value, so it doesn't really matter. And what gold has proven over all these years is not just silver's proven that it can buy the same goods and services over time. And the way that I've proven this is really simply using the Bureau of Labor Statistics, which is, I'll take the L out of the middle and you can figure that out. But I can get consistent numbers from 1913, anytime that I want up until the most current publication, right? So a standard basket of food was up between 1913 and the last time I did it, something like 2,500 and whatever percent. Spot silver, manipulated as it may be, was up same period of time over 3,000%. So it maintained your ability to buy the same thing. Spot gold, manipulated as that is, was up over 13,000%. So it maintained your ability to purchase the same goods and services, but it also expanded your ability. So it gives you an opportunity for growth. And with spot at 3,500, and you brought this up, so I want to come back to this, but with spot at 3,400, 3,500, wherever it is a huge bargain. Now, the stock market at all-time highs, you can only convert those into dollars, can't you? So what's the real value there? Zero. Because the Federal Reserve is actually, you go in there and you look at the purchasing power and you'll see a big fat goose egg on the bottom of that left-hand axis. They are telling you the true value of the dollar is zero. So anything that you can only convert into those dollars, what's that true value? Zero. Fundamentally zero. I personally have a $10 trillion Zimbabwe note. I can buy nothing with it. Nothing. So, but people get blinded by numbers. They think that numbers matter. They don't really matter. It's
Totally.
just a smokescreen, right? I don't care how many dollars I have. I care what I can convert it into. And a lot of people, unfortunately, are really struggling with the basic necessities of life, which is why I have to expand this. And I did since 2008. I developed my mantra. This is what I live by. Because what do we need as we're going through this? We need surety in food, water, energy, security, barterability, which for me is primarily silver, wealth preservation, which for me is primarily gold, community, because quite honestly, there is not enough time for you to do everything that you need to do to be prepared for what we're already going through that you just don't know yet, and shelter. These are the things that we need to lead a reasonable standard of living. Community has become arguably the single most important part of the mantra, because I knew in 2008, I was getting ready to retire. I was living in a little 2-bedroom condo that I could just lock the door and off I go. And my alma mater was Shearson. So I was watching that like an absolute hawk. And when Shearson went out, I knew that the system that I had been used to died, was dead. So there's so many layers to this, having understood currencies and currency life cycles. And that's when I became a prepper.
I'm also a prepper. Yeah.
Awesome. Because we need to make sure. But I've been working on it since 2008. And so I'm probably more prepared than most other people. But we just don't have that same luxury of time. So skills are barterable, right? anything, I think we need to come together in local community to create that security in all those different mantra areas, food, water, et cetera. But we have to come together in global community. I'm so appreciative of you having me here today and this opportunity to have this conversation, because too many times it's about divide and conquer. So you have one mindset, I have a different mindset. So, I need to be angry at you and you're wrong, and vice versa. No.
Yeah, none of that here.
We have to come together, because I do a live every Tuesday. And, I have some people that come into the live, and that's when they ask me, I'm usually there about 3 hours, and they'll ask me any question. And when people that are Bitcoiners or other people that believe in cryptocurrencies come in, and, maybe, and a lot of times they're doing both. I don't think it's exclusive, right? I think you can do both.
I agree.
Right? But some of the people in the group, or like, they'll start coming down on the people that are not pure gold and silver people. And I don't feel like that at all. I mean, I went to XRP. I'll talk in front of any group. I don't care, because it's more important for us to come together in community and on a larger scale. The only way that we've got a shot at getting sound money back in the system again is if we all come together and demand it. It is truly time for the public to take their power back. I have never seen this opportunity to do it. It's screaming at me, because I know 100%, I mean, a gazillion %. I absolutely know that we are at the very end of this currency's life cycle. And what gold and silver do is they're the bridge. And I mean, I think you think that Bitcoin is the bridge, and we're going to find out. We're going to find out. But you want something that holds your purchasing power from one system into the next system. But let me tell you, the opportunities that present during this period of time are ridiculous. And so wherever you're starting, you can come out the other side in such a better position. I personally, for me and for my family, I'm about legacy building. And I know how they do it. These are assets that survive currency regime shifts and wars and everything else. Gold, real estate, and truly rare collectibles. And maybe that's where this fits in. I don't know. We're going to see. It's not tested yet.
Okay, so I'm going to do my best to share a little bit of the Bitcoin maxi
Good
ideology. And Robert's not here today. It's a Sunday. He's with his daughter doing dad stuff. In a lot of ways, I wish he was, because it's such an important conversation, and I'm not as well read as he is, and I don't have the cognitive horsepower he does, but I'm doing my best.
You're doing great.
Well, thank you. I think so. If we go back to a bimetal standard, and I hear you talking, I totally believe in this as well. We need community. We need to band together. We need to take our power back. All of these things are very obvious. If we don't end up in some apocalyptic situation on a bimetal standard, I need a derivative system. It's going to be digital for me to order meat from Colorado, for example. I just had beef shipped to my house the other day, grass-fed, and not vaccinated, no antibiotics, no hormones, whatever.
Pastured. You need pastured more than grass-fed.
Yes, this is my wife.
And we can have this conversation too.
My wife is really on it. Yeah.
Good. Awesome.
So in the digital age, we need to have something that can move digitally. And I think I can speak somewhat on behalf of the Bitcoin community and a lot of the listeners to the show that in some sense that derivative system is, quite literally been co-opted and corrupted, and is why we have the problems that we have today. And we were removed entirely from the gold standard. With Bitcoin being a decentralized public ledger bounded by energy, the mining process is what is issuing the new Bitcoin to the miners. The miners are getting paid that block reward. They're getting the privilege of adding the new block to that public ledger. It takes an immense amount of energy for somebody to do so. It takes almost no energy for somebody who's running a node, a copy of that ledger, to expose a dishonest transaction. So you effectively have an immutable ledger. So Bitcoin being digital gold, finite in supply, that's auditable. Currently, it's my understanding there's around 100,000 copies of that ledger being ran. They're called nodes globally. Watching that ledger, watching the Bitcoin supply, you have effectively a digitized gold that's incorruptible, and any derivative system built on top of that is much easier to expose if there is dishonesty in that. So for example, if you use a Lightning provider, you're sending your Bitcoin to an address that is effectively going to be a ledger on top of the main chain, the main ledger. And so you can scale Bitcoin, you can do more transactions at a lower cost than you can on the main chain. The ability to then protect yourself from that, effectively a bank, like a Lightning provider would be like a bank. You're going to give them the Bitcoin and they're going to use their ledger internally. If they're issuing more Bitcoin than they have Bitcoin on reserve, it's really easy anywhere in the world to take possession of the underlying asset. One of the challenges with gold is let's say we're on a gold standard, and it's possible for me to go to a bank and say, here's your currency, here's your derivative, here's your gold backed, whatever. I want the gold, my gold. I want to convert that. If they've issued more derivatives and they have their underlying asset on reserve, then they're going to go out of business or be exposed. They're going to have more claims to the gold than they have on reserve. To do so in the digital age with the physical commodity is much more difficult to do than with Bitcoin. So the Bitcoiners, and myself included, think that Bitcoin will become the underlying asset in the global reserve asset, where gold has struggled to protect us from the corruptibility amongst those derivative issuers of the banks. Does that all make sense?
That makes a lot of sense, and I hope you're right. And again, I'm waiting for the test because everything is a huge test. Having said that, there are ways to digitize the physical gold so that it is easier to transact. But again, for me, it always has to be redeemable 100% of the time, because if it is not redeemable, it doesn't mean that you have to do it. I want the right to do it. And when you're talking about gold, it was very, I mean, honestly, we have not run the test on this digital age yet, and everything gets tested. Everything gets tested. So the way that we've built our portfolios, because at Zang Enterprises, we take a very layered approach, right? So we're looking at what happens at the first part of this, what happens in the middle part of it. And the first thing we want to do is sustain your standard of living. That's where the digital gold comes in. And then I'm not really referring to Bitcoin because you can't convert that into gold, right? And that energy, I mean, it's going to be interesting to see, because I know already that with gold and with silver, but silver gets destroyed in use, whereas gold does not. So I know that I can use this energy over and over and over and over and over again. This is kind of like, well, it took energy to create it once. So, but you can't really use it anywhere else. We're going to see what happens. This is a much broader, they look the same, right? You know, I mean, don't you kind of, why did they do it gold? Because they want you to think of it like it's gold, right? This is a derivative of fiat, fiat is a derivative of this. And there are a whole bunch of derivatives that we can't even see that are on top of all of this. But the layered approach takes into account whatever is most recognizable at first. So even let's just say cash, that we know is not too far from zero. And when the rest of the public confidence is gone, that's it. Now we're in hyperinflation, rapid inflation will push us over the brink. So I don't think we're very far from that. But the other thing that you want to do, and this is really where gold and Bitcoin can come together, or any other intangible assets, because it's an intangible. You can't really hold it. They have to create a depiction of it. And that is to properly diversify. Now, Wall Street might want you to think that proper diversification are stocks and bonds and cryptos, right? That's what they want you to think. But all of them are intangible. Gold, silver, physical in your possession. Part of what we have to do is become our own central bank. Do you really think that the Federal Reserve has your best interest at heart? That's not their job. And we started talking about price stability, and then we kind of got off on it. But do you know what the central bank definition of price stability is? Inflation at a low enough level that you do not change your behavior. You don't ask for more money at work. You don't change what you're buying. You just take on more debt to sustain your standard of living. For them, that's price stability. And their job is to regulate the rate and speed of it. And have you noticed how many talking heads on TV are saying, well, that never happened before. And well, that's kind of unusual behavior. Oh my goodness, right? You've heard that. That's because we're at the end of this life cycle. And so the things that are happening now, like it was supposed to be stocks and bonds. Here's a great example, just to make it a little bit clearer, right? Stocks and bonds, Wall Street wanted you to think that stocks and bonds were diversified because when stocks were going up, bonds were going down and vice versa, right? However, that's not happening anymore. Today, they can move in tandem, and that's actually been started in 2002, and there's a whole bunch of things about that. But now they operate in tandem. Why? Because they're all dollars. Because it doesn't really matter at the end of the day. So a lot of my work is about recognizing these repeatable patterns, and the strategy that I developed for myself based on all these years of developing currency life cycles is what we actually execute for everybody, but we take into account what your circumstances are. So the first layer, and this is where things like glint or Kinesis gold that are redeemable on a little credit card, easy for transactions anywhere in the world, that makes sense. That's also where gold backs or gold money would also fit, as well as a level of cash. So, and then you go to your barterable position, and then you go to your protected position.
And your barterable position you're referring to as silver.
Well, it's a combination of silver and gold because it depends. It's based upon your current standard of living. And
What you're
there's
trying to
some
buy.
parts of it. Exactly.
Okay.
So if you're going for strawberries, and hey, 2014 is not that long ago, right? You remember the sovereign debt crisis that was happening in Europe. It was right around the same time with Greece and all of that. And people actually survived that by pulling out their silver. Could be jewelry, could be chopsticks, it could be picture. It doesn't matter. Gold and silver in any form are monetary at its base. So your barterable position, if you're doing, say, there are some things that real estate runs risk with. One of them is your property taxes, because how do governments generate their income? Through taxation, right? And you cannot, like, I can put this in my pocket and go wherever I want. You can put this on a hard drive and go wherever,
Or in your head.
Thing.
You can memorize 12 words and take it anywhere in the world.
Well, you could. I'm too old. Okay.
You could write it
I'm not
into a
trusting my
song or a
memory.
fable or
Right. I would have to do that.
words in a book or a
That's
diary. But yeah.
Probably the best utility that is very obvious for me to see.
Yeah.
Right.
Your ability to escape capital controls, take your value across borders.
So far, but we've also seen with China and a number of other countries how much they can control the internet. I mean, that's part of the challenge that I have, is that if, I'm just hoping it's not an illusion, but we're going to find out. However, the next part is to protect whatever intangible wealth you've managed to accumulate. And since we know what the fundamental value is, it's pretty easy to just balance that out and properly diversify your portfolio to protect whatever intangible asset wealth you've accumulated. Beyond that, then you want to be in a position for growth. You don't own any real estate right now, but it's severely overvalued, intentionally severely overvalued. Gold is severely undervalued. That's going to flip-flop. And so historically, it's actually much better than what I'm about to say, but it's easier to just say it this way. Historically, 25 ounces of gold can buy an entire city block, buildings, and all. So a big part of the strategy is to hold your purchasing power intact. And during this transition, and we'll see these patterns, these are very visible. It's what I try and teach in my work, is to recognize these patterns. So we'll know when to take some of the wealth out of the gold and convert it into those income producing assets that you cannot outlive. When I first became a stockbroker, nobody ever talked about outliving your retirement. Now you talk to a stockbroker, okay, you got enough money till you're 80. Well, what happens if you live past 80? And oh, by the way, can't I leave something to my children and to my family? Can I leave a legacy? So it's a as far as I know, we are the only ones that have such a well thought out strategy. But that's because I don't know anybody else that's studied currencies and currency life cycles since 1987. Do you?
No, and when you say we, you're referring to Zang Enterprises.
I am referring to Zang Enterprises. I'm really proud of us and who we are as human beings, because we really want to make a positive difference in this world. We really are battling to get sound money back in the system. And it's not for me. I'm 70. I have plenty. I could live the rest of my life and be very comfortable. That's not an issue. But I'm looking at everybody's children. I'm looking at the future, because the design that I see is taking us back to feudal times when, what does the World Economic Forum say? By 2030, you will own nothing and be happy. And one of the challenges that I've seen, because I'm so old, is the easier it is to spend money, the more money you spend. I mean, I came up before you could even go. I remember when you could first go to an ATM and pull cash out. Oh my God. You didn't have to talk to a teller. You didn't have to, well, I remember that so well. And I can also remember overdrawing my account because it was so easy. Instead of just going into the bank and making sure what your balance was, blah, blah, blah. So everything is being transitioned to your phone. And with the tokenization that they are doing for all of your assets, we have to be aware so that we can make choices that actually put our best interest first. What a concept. What a concept. Because I can see the good in this stuff, but I can also see the flip side.
Yeah,
Can you see the flip side?
I can. And wow, there's so much there.
Have you ever wanted to start a business in the Bitcoin space? If so, then the Wolf Startup Accelerator could be for you. Wolf is the first startup accelerator dedicated exclusively to businesses developing in the Bitcoin Lightning Network. 4 times each year, Wolf brings teams from around the world to New York City to work with like-minded entrepreneurs, pushing the boundaries of what's possible with Bitcoin and Lightning. The program is designed to help early-stage companies achieve product-market fit, develop their brand, secure early-stage funding, and grow businesses that fuel the global adoption of Bitcoin. Go to wolfnyc.com to learn more or apply today. Again, that's Wolf, WOLF, NYC.com. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risk and trade-offs. Onramp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. Onramp secures your Bitcoin in a segregated cold storage multi-key vault guarded by 3 independent institutional-grade custodians, none of which have unilateral control over your keys. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or be withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, Onramp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Schedule a consultation with the Onramp team to learn more at onrampbitcoin.com/breedlove. Again, that's onrampbitcoin.com/breedlove.
I don't think of Bitcoin as a dollar derivative. I do think Bitcoin is the only thing that's digital that's outside of the system. I will also say that you and I have completely aligned values, and the Bitcoin maxi community, if you will, definitely has aligned values there. I'm a free market maximalist. I think that
I would agree with that.
we should keep the state. I think, you know, as far as government goes, my first thought is we just need a lot less. And so as I'm thinking about gold and silver and its ability to function as base money in the digital age, I think that the most effective way for that to be possible and minimally corruptible would be through having free market in the banking sector, where you can use a derivative of some sort by a local bank that you use as a gold depository, and you can trade their digital certificate, and you would then keep them honest by being able to redeem your digital certificate for gold at any time. And the ones that are dishonest would likely be exposed. But one of the things that I think, and so I also say, the only diversified portfolio that I personally am supportive would be one that is both Bitcoin and gold.
That could make a lot of sense.
Yeah. I'm not an advocate of stocks or bonds and even real estate as a store of value outside of the house that you live in.
Well, you got to have roof over your head.
Yes. I think that real estate specifically has been so heavily monetized as a result of the debasement of the currency. People are using houses as savings accounts, and that's contributing to homelessness, and that's a monumental problem. I think there's a lot of people that are driving around in their Teslas with college degrees, virtue signaling, drinking $14 frappuccinos or coffees or whatever it is, looking at homeless people on the streets, thinking to themselves contemptuously, if they would only go to school. And it's
but for the grace of God.
Yeah. And then they go home, they do their thing. As the years go on, the value of their real estate portfolio increases in nominal terms. They can then leverage that real estate, that newfound equity, which isn't technically earned and may not even be there. It's just being valued in dollars. Is the real estate going up in value, or is that dollar you're measuring its value going down?
Voila.
Then you get to borrow against that equity. The current banking system needs to continue to debase the currency. So they're going to loan that individual some newfound currency. It's going to be some percentage of, if not all of it, it's going to be newly minted currency. They get to use that to go buy more real estate. It creates this feedback loop. That's the cancel-on effect. The bifurcating our society and creating a have-not and have-yachts world. And it's extremely problematic. Now, unless, and this is me personally, I actually, and I'll admit this, just to give you an idea of my extreme thought process here. When the Saylor series hit, which was a conversation with Robert Breedlove and Michael Saylor, that was, I believe, 17 episodes. When I listened to that in 2021, I sold all of my gold and silver, and I put all of that value into Bitcoin. Because in that conversation, I concluded that it was highly probable that Bitcoin would not be corrupted and not go away. Prior to that, my understanding or thought process of Bitcoin was this is going to absolutely revolutionize and change the world. It's a checkmate on central banking, or and it's going to go up at a faster rate than everything else because its supply is going to be increasing at a slower rate than the supply of everything else, including gold. But the governments are going to shut it down. After listening to the Sailor series, I came to the conclusion that it's not probable that that's possible. And like you say, if you don't hold it, you don't own it. If you have your Bitcoin in self-custody and you use a hardware wallet that generates a public address and a private set of keys, and you have possession of those keys, the probability that somebody can steal that Bitcoin or debase that Bitcoin is extremely low, borderline impossible. And so my thought process is that it's more likely that we move into an era of more innovation, more abundance. We need digital commerce. We have a global economy where we're trading goods and services over borders. We need something that can move at hyper rates, which is why I took on that position. I think gold is personally very important to have in a apocalyptic situation, but personally being spiritual and thinking in terms of energy, vibration, and frequency, I stopped worrying about that so much. Now I'm definitely prudent and vigilant, and I have lead. I didn't get rid of my lead. I didn't get rid of my water and my freeze-dried food.
You really going to shoot somebody?
No, but if the power grid goes down for weeks on end and somebody's trying to come in and hurt my family take my water and my freeze-dried food. So I didn't digitize every facet of my life, but I shared that because I think that there are a lot of people in the Bitcoin community, which is global and growing faster and faster every day, who think the same way. And so unless the internet were to be turned off and kept off, Bitcoin is not likely to go away. Now, I am no means against gold or silver, but I do struggle with, unless we can go into a free market dynamic or free market era where we have a true free market in the banking system, I think gold remains susceptible to corruptibility in its derivative system in a digital era where we need to send value across space and at hyper rate. So what are your thoughts on all of that? And I don't mean to steel man you or be disagreeable by any
means. We
means,
have to have a discourse, and we don't have to agree on everything. We just have to come together in community, because time is going to tell both of us who is accurate, who is inaccurate, what parts of it are accurate, what parts of it are inaccurate. I'm basing everything that I'm doing on the historic norm. And, Bitcoin is a new technology. 2009, that's not that long ago. And the system died in 2008. So a lot of what you say is okay. It's certainly, plausible. And we're certainly watching the evolution. But I don't think it's going to be an easy evolution from one system into the next system. And that's really what I'm talking about. And while people think, well, that can't happen here, it's in the face of it actually happening. Because like I said earlier, I'm prepared to put my technical neck on the line and tell you right now that we've already entered the period of hyperinflation. And while you will see people driving their Teslas, drinking their $14 Frappuccinos or whatever, and with disdain, I've also lived long enough and had my own personal ups and downs, as everybody does, to realize there go I, but for the grace of God. But knowing and understanding the monetary system like I do and paying attention, I don't really pay it as, I'm starting to get a little political, because I realize if I want to get sound money in the system, that I'm going to have to be inside of the system. So bear with me. This is a new thing for me. I'm a constant learner. But, having said that, I've always just stayed economic, because it really doesn't matter who's in office. It's so easy to watch this shift right along, Republican or Democrat. And to see what that future holds, I'm telling you, the only way to really ensure that you maintain your purchasing power at this point is with gold. So you're going to do Bitcoin. That's great. Do it. I don't disagree that this is the new system. For me and my personal integrity, my integrity is absolutely everything. And so when I first saw Bitcoin come about, and I've been paying attention to it ever since. What I saw was a Trojan horse. That's the only reason why personally, if I weren't doing what I was doing, I'd probably already own some Bitcoin, right? And I don't own, I used to own stocks and I used to own bonds, and I don't own any of that. But I can't sit here and say I'm trying to get sound money back in the system and playing into what they're doing to potentially position us into a pure system of, you talked about the haves and the have-nots. Look at the productivity patterns that we've seen. This all happened once we went to a pure fiat system. I don't know that this is gold. It could be digital gold. I'm not saying that it absolutely isn't. What I'm saying is I don't know.
That all makes absolute perfect sense.
Right? So I'm sitting here waiting, holding my purchasing power and becoming prepared because I don't want to have to shoot anybody. So, and it was during COVID that I realized that I needed to do something more because there was violence that was happening at the Capitol in Phoenix, which is very near to where I live. And my children that live in Scottsdale and Paradise Valley, there was violence up there at Fashion Square of all places, which if you don't know, you might not realize, but it was kind of shocking. It was very shocking, actually. And I saw the hole in my system because no matter what happens, you and I live in a tangible world, right? We're sitting here at a desk with chairs and a microphone and water. This is a tangible world. And so we have to be prepared for both. And I'm glad that you're a prepper. But when I saw that, I thought, oh my God, I slept that night with a gun in my bed. And I thought, this is not how I want to live my life. So then I went on a quest to find a completely off-grid property, which I do. I now own 41 acres on the top of a mountain. And it's very, 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 did I say very remote? So it's very hard to get to, but that's where I'm going when the poopy hits the fan. And in the meantime, what I've done is out of that 2-bedroom condo, I bought a house in Central Phoenix that was large enough to house my children if I needed to. I was never really even much of a gardener, but I've learned. I've become an urban farmer, and I've actually planted out I'm on a corner, and I have half an acre. I don't have a lot of land in central, and I'm in dead central Phoenix. I don't have a lot of land, just a half an acre. But I've planted the entire property out with food so that when people are hungry and hopeless, they make choices they would not otherwise make.
Totally.
So my hope is that as people are going through this and they walk by my property, they pick a zucchini, they pick a pomegranate, and
Don't
maybe
break
they
the doors down and steal the gold.
Well, security is huge for me. I'm not saying it's absolutely impossible because I have had a CSI guy that was a client, and he said, I'm telling you, Lynette, if somebody wants in, they're gonna figure out a way to get in, but you don't have to make it easy for them, right? And if somebody makes it up to, I'd rather feed people. I don't want to shoot them. I'd rather feed them. I'm a mother. It's my thing. I cannot stand it when people are hungry.
Yes, I totally agree. Over the last many years, there have been times I've been driving around and I've seen homeless people starving on the streets, and it's literally brought me to tears. I'm very bothered by a lot of things taking place in the world.
I had a nephew that ended up, he was homeless and he had mental illness. So a lot of people that you see on the streets, they can't help it. It's not really like they had an independent choice about this. They can't help it. That gave me a tremendous amount of empathy when I see homeless people, because I don't really know what their issues are. And thank God I don't. But that's why when you said something like that, I went, there go I, but for the grace of God, because we're just lucky, right? That we're sitting here today with what you've gone through, with what I've gone through. And I know that my job on this planet, and your job on everybody's job on this planet, is to share the gifts that we have been given and to leave this world a better place than we found it. And that is my personal mission. But I can easily say that for almost everybody at Zang Enterprises, they all have that very similar mission. Every single one of us wants to make this place, this world, a better place. And we want the public to have their choices, whether that's brought in with Bitcoin, gold, and silver, a combination, or whatever it's going to be in the future. That's why I'm here, right? That's why this conversation is so important. That's why when people come into my live, it's like, no, everybody needs to have a voice because you know things I don't know. And we can share this. And then people can listen to this, listen to that, and go, what makes sense for me?
Yeah, and
right?
make an informed decision.
Educated choices that put your best interest first, because honestly, who is going to care more than you do about your future?
Nobody. Yes. Wow, I love that. I love all of that. You said something that I want to dig a little on. I want to understand. You were concerned that Bitcoin is a Trojan horse.
Mm-hmm.
And tell me a little bit about that. Are you referring to the CIA and the NSA creating Bitcoin?
I am concerned
rug
about
pulling the public.
Well,
okay. What are your thoughts on this?
Okay. So my thoughts on this is what they need for any new system is adoption. And the way that they get adoption is slowly at first and then faster and faster. So, I don't know exactly when, you came into Bitcoin.
2017.
2017. Okay. So I'd seen the ups and downs of it because I'd been paying attention to it for so long. And so they let it run and people go, woohoo, more people jump on the bandwagon, right? So I'm not really singling out Bitcoin, but it was the first one. And it's the one that was used to get adoption of the new digital age. And look at all the coins. I mean, let me tell you, do you know how much money I could have made? And the people, and Jacqueline is here. She's the president of my company. She's been with me forever. And the people that would call and say, oh, Lynette, just here's this coin and come and sit on our board and come in. And I'm like, have you listened to any of my work? Right? I mean, I couldn't in good faith do something like that. But what I'm talking about is as a Trojan horse, it was used in allowing it to run without any limitations is getting people to adopt. It's not just Bitcoin, but adopt the whole cryptocurrency ecosystem. I'm far more concerned about stablecoins than I am about Bitcoin. Because,
I'm with you on that.
Okay. And I'm telling you right now, people don't realize this. The monetary system changed when they passed that Genius Act. I'm wondering whose genius we're talking about here. But to get adoption and to get people to marry the system, that's what this is about, and allowing it to run, because people that buy Bitcoin or cryptocurrencies, especially in the beginning, I don't know that it's as true today, but we have the same mindset. It's just like you were saying, we're aligned on a whole bunch of levels. So how much more money would have gone into gold? And it doesn't mean that it would be reflected in the price, because I can tell you for an absolute fact, 2009, before the central banks really got too heavily involved in derivative contracts, I was in the Bank for International Settlements that tracks global derivatives. And what I saw and counted, I didn't know print screen at that time, but what I saw and counted with my own eyes, for every 1 ounce of gold, there were 62,000 derivative ounces of gold. And that was 2009.
Wow.
Yeah. Do you think that has any impact on the visible price? Oh, this is what I also want to talk about, because it's so interesting. the beginning of this year in the US, most of the gold trading is just contracts. It's just a spot contract, whether it's 500 ounces or now the COMEX is taking it down to an ounce because in any Ponzi scheme, you have to keep new money coming in, period. And so what I was seeing with that is, oh God, I lost my train of thought. Shit.
The derivatives, the manipulation of the spot price.
Right.
Mm-hmm.
And they do that with both gold and silver because a rising gold price is an indication of a failing currency and a looming crisis. They want this to run because they want adoption. The higher it goes, the more people are watching, the longer they can sustain it, the more people adopt it. And it's kind of like, how do you catch a wild hog? Well, you put free food in the middle of a field and you wait. And the hogs come and they eat this free, easy food. And okay, everything's hunky-dory. Then you put up a fence. And at first, they'll stay away because this is unusual, right? Crypto winter. This is unusual. I don't know so much about it, but you keep putting that free food there. And after a few days, they don't see any change. So they come in and they start eating the food. And then you put up another side of that fence. And, maybe they're a little hesitant, but okay, that happened before. Nothing bad happened. Must be okay. And they come back for the free food. You put up a third side, same kind of thing, but hey, it's happened 2 other times and there's no big deal. So this must not be a big deal. Now you got all of the hogs in there eating all of this free food and boom, you put up that fourth side and you are done. And that's why you must be diversified.
Yes. And that's why it's very important if you own Bitcoin to hold your private keys. And I think what you just described is potentially what's taking place with these ETFs. Because if you own a Bitcoin ETF, you don't actually own Bitcoin. You own a claim to Bitcoin, but you don't own the Bitcoin. And I personally think that Bitcoin is increasing in value because more people are moving their economic energy into that network more so than it's being allowed to increase or encouraged by the powers that be, the proverbial overlords, to be adopted. I think initially there was...
You think they don't want adoption? Did I mishear something?
At this point, I think that they do.
Yeah,
with
they
the
totally
SBR
do.
And the ETFs. But I think originally that there was a pushback against Bitcoin. The China mining ban. I mean, there was a lot of things that happened there that were indicators to me that the government was adverse to this, but they can't stop it. And so if you have a free and open protocol with a decentralized ledger that cannot be corrupted, if that's true, then there is a game theory playing out where you have to adopt it or you're going to suffer if the world does. And it is a game, seemingly, a game theoretic shilling point, where it is the most logical place in the digital age to put your economic energy or your value if it cannot be corrupted, if it cannot be stolen, and it cannot be debased.
One of my highest health priorities is keeping my brain in top shape. To take care of my brain power, I do many things, such as striving to read, write, exercise, and meditate daily. One of the latest tools in my brain power toolkit is MindLab Pro. MindLab Pro is a nootropic supplement that is scientifically proven to enhance your brain power. When I take MindLab Pro, my mind feels like it has a better grip on the world, my thinking is more lucid, and the articulation of my speech is radically improved. MindLab Pro has been tested in rigorous, double-blind, placebo-controlled human trials and has been proven to enhance brain power for users in every age group. MindLab Pro is an advanced formulation of 11 nootropic ingredients and is backed by research from over 1,400 human trials conducted over the past 32 years. So if you're looking to enhance your brain power, MindLab Pro is an excellent solution. Go to mindlabpro.com/breedlove to start enhancing your brain power today. Again, that's mindlabpro.com/breedlove. Knowing when to buy Bitcoin can feel complicated, and knowing how much to buy can be overwhelming, and getting started can be a headache, but it doesn't have to be. That's exactly why I recommend Coinbits, because it solves these major blockers and it's the easiest way to buy Bitcoin. With Coinbits' Round Ups feature, you can automatically convert your spare change into Bitcoin while you shop. For example, when you buy a coffee for $3.50, the extra 50 cents is rounded up and it goes straight into Bitcoin. Here's why that's a huge win for you, because you don't have to be a tech wizard or try to time the market just right with Bitcoin. With Coinbits Roundups, you simply set it, shop, and stack sats. And you can set this up in under 2 minutes. Just visit the website, connect your card, and boom, you're buying a little Bitcoin every time you spend money. So stop wasting your time with complicated exchanges or confusing shitcoin apps. Coinbits simplifies your Bitcoin savings strategy. So go to coinbits.app/breedlove. Again, that's coinbits.app/breedlove.
You know the challenge that I have?
I would love
right?
to hear it.
For me, this is so simple,
Yeah.
right? It holds the energy and it's used everywhere. So you've got your broadest demand and all of that. I'm not an engineer. I'm not a little engineer, let alone a crypto engineer where I actually can go in. It's great that it's open source, but if I go in and I look at that source, my eyes are going to glaze over and I'm going to go blank. And so it's just like the fiat money system. Nobody understands the fiat money system, so they can get away with it. And that is my main concern. That's my main concern. I have to be a specific kind of engineer to understand whether or not I'm being, pardon me, screwed.
Yeah, that makes sense. My thought process on that, because I'm not a software engineer myself, is that I run a node, which is software that I downloaded from the internet, which is open source, and some of the smartest, brightest people in the world today are checking that software, working on that software all the time. And so you could say I'm traveling quite far out on the risk curve with the trust there. But
right.
if that
it requires that trust.
It does. But if that ledger stays decentralized and secure and can't be corrupted, then would you agree that that is revolutionary and going to change things significantly? And that the financial system is going to reorganize itself around that, especially in the digital age?
I think that that's a possibility, and I hope that you're right. I'm just not an engineer to know if you are or not.
Mm-hmm.
And so I sit back because having studied this, I have a lot of patience. And I'm going to tell you, I don't care if I'm 20 years too early. I just don't want to be 1 second too late. And I know what happens in these transitions. It is not a smooth transition. Everybody wants to think that it's just going to be, okay, we go from this system into this system. That's not how it works. I don't know, maybe this time is different, but I've got 4,800 times of data that tells me that this time is not likely to be different. And so if I can hold my purchasing power, then that means that I'm in the position to take advantage of any opportunity that comes between this system and this system. And since I'm not an engineer, I like to keep things really, really, really simple. I do understand fiat money and how that works. It's where I've lived my life, understanding that piece. Most people don't, but fiat money is really easy to understand if you just look at the purchasing power chart. I'm sorry, you gotta look at that chart.
I will.
Because that is probably the single most important chart that I ever look at. And I really pay close attention to that. Do I think it's 100% accurate? No. What did they do? They don't change behavior. They change formulas, right? That's what they do. But in their dishonesty, they're still telling you there's 3 cents left out of the original dollar. We have to get to zero. If Bitcoin, let's talk about stablecoins for a minute, because that to me is a much bigger risk about what's going on. And the system has changed. When they passed that law, the system has changed. What are stablecoins about? You always have to look at the name. They're not stable. They're based on the dollar. That is about developing a new artificial market like the petrodollar created a new artificial market for dollars and treasuries in the 70s. Thank you, Henry Kissinger. I remember that. I remember it so clearly. Didn't really understand all the implications of it, but I remember that. And that's the problem that we're really dealing with now, is that there's no purchasing power left. We're shifting into a new system. The stable coins have ushered in that new system, but that's about creating an artificial market for debt and dollars and translating that directly to the public, and particularly in the third world countries, because they had the fastest adoption only because their currencies were in worse shape than the dollars were.
Yeah. So I'm with you on all that.
But what can you convert this into?
Well, I mean, personally, I was in El Salvador 3 times last year, and I was buying things in farmers markets. I'm buying tallow soap and grass-fed steaks and with Bitcoin direct.
Good. It's good. It's good to hear that, because that's not a lot about what I hear.
I was in Madeira, Portugal. I was in Prague buying things direct with Bitcoin. I mean, I could buy my beef in Colorado with Bitcoin. But what I wanted to speak to is I think of, and I've listened to a lot of Michael Saylor, and Saylor talks about, so Saylor talks about currencies collapsing into the dollar and properties collapsing into Bitcoin. And I think that stable coins, they're called stable because they're stable in dollar terms, but that is oxymoronic because the dollar is obviously not stable. Yes. So I think that the adoption of stable coins on behalf of the United States government is a way for the dollar to scale globally in the most energy efficient way. And that's why in third world countries, just like you mentioned, people are adopting stable coins, because if you're in Venezuela, like, you would much rather have dollars than Bolivar. I believe it's Bolivar. That's
right. It is Bolivar.
You'd much rather have dollars than Bolivar. And if you can get that on a smartphone, then that's a much more effective medium of exchange. And I love what Mike Maloney says. And then I've watched a lot of Mike Maloney, and especially in my early journey down the economic rabbit hole. And I think in some of his interviews or podcasts, his producer would even push a buzzer every time he referred to the dollar or any other currency as money. And it would go, it's a currency, it's not money. And
He's right. He's right.
And so personally, I believe that gold and Bitcoin are the only two things that I think of as money. I think gold was, the free market used gold as money. It's a commodity. It's based in nature and the laws of physics. And
the demand factor.
Totally.
Because honestly, if you have something that is used in one place and that demand goes away, you have nothing. If you have something that's used lots of places, then you have more, obviously you have more demand.
Yes.
So it doesn't go to zero.
So I think of Bitcoin as the world's first engineered money, the first thing that was engineered to be a money that actually, and highly probable to be successful. And if it is successful, it is the digital version of gold, capped in supply, bounded by energy, decentralized, secure. I lost my train of thought. We've covered so much, guys. This has been so fun. And I don't want it to be a debate by any means, but it is also
but
very,
it's part of it.
Fun.
And the conversation is important to have. And I'm going to tell you, I'm going to like you at the end of this conversation.
I don't feel any ill will or bad energy whatsoever.
Exactly.
But since I lost my train of thought, I will bring up something else that I do think about that I think is very powerful. I think that because of the physicality of property, gold, real estate, whatever, let's say gold specifically, historically, with physical property, if I want what you have, or some sociopath or bandit wants what you have, and they say, give me some, and you say no, they say, I want some of, I'm going to tax you. You're
that's what governments do, right? Look at the tax on gold. Look, you can use Bitcoin, you can use cryptocurrencies, I think even broader than this now, to get a loan, right? They want adoption.
Well, yeah, I think there's a lot there on that note. I think that they want another vector to debase against. And if Bitcoin stays decentralized and secure, it's supreme collateral. If I own a house, I get in a car accident, I get all screwed up on fentanyl, I'm in the middle of a remodel, my house is half ripped apart, I go into foreclosure, the bank has to sell that house to whoever is willing to buy that house in that jurisdiction, in that condition it is in. If I borrow against my Bitcoin and Bitcoin stays decentralized and secure and I go under, and I can't service the debt, they can sell that Bitcoin 24/7, 365 globally, and they can be whole or whatever, right? But going back to the physical nature of gold and the incentive to violence. So let's say you're on a ship and you come to a Venetian port, and I say the tax is half of everything that you have, and you say, that's too much, you get screwed, I don't want to pay you that, and I just say, I get 100% of what you have. So the incentive is to violence. If I cross your border with an army and I could go into your Fort Knox, then I get all of your gold. So in some sense, a sociopath is incentivized to just kill you and take your stuff. One of the things that I and many other Bitcoiners, and I want to make it very clear, I am as adverse to cryptos other than Bitcoin as I am to the dollar or any other government issued, controlled, corrupted currency, whatever. With Bitcoin, because it's informational and all I have to do to protect my Bitcoin or own my Bitcoin is have 12 words. If you kill me, you don't get my Bitcoin. So that inverts this incentive to violence to an incentive to peace and cooperation. And I think that that's a big deal. And I think in a good example.
That would be a big, you know what? I really had not thought about that piece. I really don't worry too much about the violence because how many people have gold anymore, right?
Well, you're also a very high vibrational person who's very positive. And to get a little spiritual and woo-woo, I think that we're creating our own reality. And I believe in the law of attraction in the sense that it's literally your vibrational frequency is being mirrored to you in the world around you. And maybe that's really crazy to say because there are a lot of people that would be considered to be innocent people who are suffering tremendously in the world that we live in today.
Yeah.
But at the very least, what I can say is if I think that way, at the very least, I feel better. Right. And that way I'm not constantly resonating with this disgusting feeling of always being scared and fearful and whatever. Right.
Right.
So El Salvador is an example that has a Bitcoin treasury. They don't have a gold treasury. And I've thought long and hard about Nayib Bukele and what he's doing and his loan with the IMF and his Bitcoin strategy. And it's quite fascinating in that sense that if a foreign army were to invade El Salvador, they don't get their money. But if they had a large bank with gold in it, the gold would be the first thing to be seized. It's my understanding when Hitler was crossing borders, the first thing that he did is go right to the banks, takes the gold.
Absolutely. Yep.
So I do share that because I do think that that is something to emphasize and is important with the understanding of why Bitcoin is something that would be important to consider having in your portfolio. I mean, even BlackRock and analysts today say that if you have no Bitcoin, you actually have more portfolio risk than if you have some small percentage, whatever that is, 1, 2, 5% or whatever that percentage is. So I would just encourage everybody to at least think about it and research it. And then I guess maybe the likelihood that you think Bitcoin will succeed or whatever that probability is could be a good marker for whatever percentage you wanted to allocate to your portfolio. Because if Bitcoin does succeed and it is truly decentralized and secure and it rips and you don't own any, you are missing out. Now, if you own gold, in my humble opinion, you're going to be the beneficiary of this transition that you speak to. And I want to know a little bit more about what you think that looks like, because you're a lot older and a lot wiser than I am. And you've thought about these things at a much deeper level and you have a lot more experience in financial markets than I ever will. So I just wanted to share that because there is this element, if Bitcoin stays decentralized and secure and you can't get it from somebody else unless they willingly give it up, then you are changing this incentive to violence to an incentive to peace. And you're almost, in some sense, forcing cooperation.
I need to say something
Go
here
ahead.
because this is so interesting. And you don't even know how many people that truly believe in Bitcoin have talked to me over the years. And I would say to them, just tell me the utility. What? I mean, I think it's great that you can take a thumb drive and move around the world.
You don't even
I've
need the
always
thumb
felt
drive.
that. Or just
You
the
actually,
12 words.
You just need the 12 words.
Yeah, but you've brought up things that
This is
you
why I
just
wish
did,
Robert was here,
right?
but you know,
that
but this is still fun.
nobody has said before.
Mhm.
And, you know, and it makes me ponder it. I'm like, I hadn't really thought about that. So yes, I have a lot of background and experience, but this is why I love to do this, because I learn something from everybody. And then I digest it. I think about it. I say, okay, where does this fit? Does it fit? Yes, no, maybe, you know, how and where. But it brings up a good point. I'm not really worried about violence, because who's going to think that you're sitting with gold? And I can't really keep anything at my house because I'm just too visible. Whereas before I did, because if you don't hold it, you don't own it. And it really is that simple. I've looked at the legal string and it's quite obvious. It's not the perception that people have. So I'd like to look at that a little bit more, because I know that that's absolutely true with any stocks, bonds, ETFs, all that garbage. All you do is own a promise. It's all counterparty risk. Now, there is definitely counterparty risk in this. They can turn off the internet, whether or not they would leave the internet off. But I mean, I don't really view that as the most free and safe place.
I think if the internet goes off, the first order of business for our civilization is to figure out how to get back online.
I think there are new places that are coming up because the current system that's been around for so long. And remember, I'm old enough to remember before we had that, and when they were working on the internet, and then when they chose to introduce it to the public, right? I mean, there is an advantage to age. You'll see that when you get to be my age. You're like,
I hope to make it
I've seen
far.
a lot.
Yeah.
You will. But I do appreciate a lot of the thoughts that you've put into this, because I hadn't really thought about it forcing peace.
Yeah. And so I have a couple questions that I won't forget that I'll get back to. And I guess I'll just share a little bit of the things. No, it's okay. I like the free-flowing element of here, even though I've lost my train of thought a few times, but it's just because you're just bringing so much good information. But there's a lot that I think about Bitcoin that is really special. And kind of going back to what I talked about, and this is actually referred to as the double spend problem. And it's what Satoshi solved, is the double spend problem. It's the first thing that's informational that I give to you. I no longer have it. You have it. It's a bearer instrument. If I send you a JPEG, I tell you where a phishing hole is, I send you a text message, an email, you have a copy, I have a copy. So Bitcoin is the first thing that's information that is a bearer instrument. That's a really, really big deal. I actually think about it, and Saylor has said this, it's the merging of the physical world and the digital world. I get a little more woo-woo and spiritual, and I think it's almost the merging of the physical world and the metaphysical world, because now I have this finite bearer instrument that's invisible that you can't get if you kill me, that I can send from me to you. And if that is true, that is a very, very big deal. And I just moved from Humboldt County. I lived there since 2009, like we were talking before we started recording. I'm a retired, professional, lawful, licensed cannabis farmer. And when I moved across the country to Miami, if I had a lot of gold, if all my money was in physical gold, that's an issue. And so having Bitcoin, my Bitcoin is in cyberspace, protected by cryptography, protected. In my particular case, I have a geographically distributed multi-sig, where the set of keys in order to unlock and move that Bitcoin is split up, and you can do any sort of schema you want. You could have a 2 out of 3, you could have a 10 out of 15, where there's 15 keys. And in order to unlock and move the Bitcoin, you need a certain amount of those keys. So you could split your set of private keys up into multiple sets of 12 words. You can put some of them in safety to deposit boxes. You can put some at your attorney's office. You can put some at your friends and families, whatever. In order to get that Bitcoin, you would have to get a certain number of those sets of keys in order to steal it. So when I moved across the country. I didn't have to move my physical precious metal. And actually being a cannabis farmer who had banking impedance, although I was lawful and I paid taxes, I had to pay $300 a month to have a bank account with the credit union. All of the money that I earned was in cash. And at some points, I had a large monthly nut to crack to run my business and my life. And when I got all of my cash gone, when I converted it into Bitcoin, spent it, whatever, and got rid of my gold and silver, because of the invisible, non-physical element of the Bitcoin and the nature of the business that I was in, I had to be concerned about if I ever got caught, even if there was an issue where I didn't even do anything wrong, if law enforcement came in. In cannabis, it was a situation where you were proven guilt. You were guilty till proven innocent.
Right.
They just seize everything. I had facilities with all this electrical stuff running. I had to have this big fireproof safe, but now that's a honeypot. If somebody comes in, the first thing they're going to do is try to get into the safe or steal the safe. I had to be worried about fire. I had to worry about seizure. I had to worry about theft. And there was points in my life where I literally had pelican cases of cash that I earned lawfully buried in the ground. So when I got all of my capital in Bitcoin behind a very well thought out multi-sig, it was a monumental feeling of relief for me. And especially where I'm in a position that I'm in now, there's 200,000 subscribers to this YouTube channel. I talk about, hey, I own Bitcoin. You know, personally, as being a gold and silver advocate, that you can't just have gold and silver at your house.
Right.
Some very sophisticated computer hackers could probably figure out how to find your address if they Google it online. And it's just, well, who knows, right?
Do we have any private? I mean, seriously.
Totally. Yeah. So that is something that is very powerful about the Bitcoin value proposition.
I agree with that, except that everything is always sold as convenience, and frequently that convenience can turn around and bite you in the butt. That just goes back to diversification because,
which I'm not arguing against.
Right.
But I will say the only people who are selling Bitcoin are the people who have Bitcoin. I don't think that that's government agencies promoting it, at least up until this point, now that we have BlackRock and the ETFs and, the SBR. But before that, this was a free market emergence where Satoshi created this protocol, released the code into cyberspace. He put it onto a discussion talk forum. Other cryptographers and computer scientists willingly interacted with the protocol. He created this thing that's almost, in some sense, it's considered to be like a freedom virus, or a vortex of incentives, where people willingly interacted with this thing. There wasn't a pre-mine. There wasn't a group of individuals like Brad Garlinghouse and, promoting their XRP. It was a protocol created by an anonymous individual that put it into cyberspace. He said it existed, and then other people interacted with it. They started to run the hashing algorithm. They started to run the nodes. And as a result, they were the recipients of newly minted coins. So in some sense, this is a free and open, or quite literally a free and open protocol that is paying people in its token to interact with it. And if it's unstoppable, then it is a game theoretic Schelling point. If it's finite in supply, it cannot be debased, cannot be seized, cannot be corrupted, then that means it's probable and logical to think that the world reorganizes itself financially around Bitcoin as the base layer money. And at least that's the best I can do to distill down the value proposition and the thesis of Bitcoin and the Bitcoin maximalist who would say that Bitcoin is going to become the world's money. It can scale in layers like gold did.
But
with
how
lightning.
can it scale? If there's a finite amount of it, then it's just in the nominal price of it creates that scalability, right?
It can scale because it's infinitely divisible. So one Bitcoin is 100 million Satoshis. That subunit is referred to as a sat. And if it got to the point where the world was using Bitcoin, and I personally think that that's probable, and a cup of coffee cost 1 Satoshi, or let's say the Bitcoin is, let's say tomorrow we wake up, it's $100 million a coin. then that means one Satoshi is worth $1. And you would now have an issue with making change, right? Like if you go buy a cup of coffee that's 80 cents, well, in today's world, it's $5.
But you know what? What you just said is another red flag for me, because with dollars, you have basically a 0.00, right? So you have 1.00.
This is where it's very counterintuitive and so inverse.
This is like,
it almost breaks the brain.
Well, it does. And so when you look at the system, the current system, designed around inflation, right? They can get rid of it. That's why they need to get rid of dollars, really, because they have limitations to how far they can go or how far past they can go. That period 0.00. You go out a little bit, but when you're at the store, they're getting rid of the penny, et cetera.
Right.
Whereas with the digital currencies, to your point, infinite. So why wouldn't they then be able to steal our wealth, since I am not an engineer, slow enough that I don't notice it? And
well, this is where it's counterintuitive because it's deflationary, not inflationary. And so if the purchasing power
but there's only one way to fight inflation, and that's with deflation, and only one way to fight deflation, and that's with inflation. I'm
not fully wrapping my mind around what you just said, but I will complete the thought though, just so we can move forward. If we end up in an era where a cup of coffee or a bag of groceries is one Satoshi, which is 1/100 millionth of a Bitcoin. That's why you could buy $1 worth of Bitcoin. It's going to be like 0.00000 whatever. Then you can have a backwards compatible software update, which the world would freely, people who are running the software, in some sense, this is actually the only truly democratic system that we have. It's global. You could then now create a backwards compatible software update where one Bitcoin becomes a billion Satoshis. So you can so 21 million coins is enough for infinite people forever, because you can continue to infinitely subdivide one Bitcoin. So a lot of people think that Bitcoin can't work because there's not enough Bitcoin for the global economy.
They say the same thing about gold.
Yeah. So let's say over the next 10 years, gold becomes worth, just, I don't know, hypothetically speaking, $100 million. Then you're shaving gold shavings off if you're in a physical time to like buy something from a farmer's market, which is my understanding why you would need that bimetal standard where you would use another metal.
You do. You're not going to take gold to the grocery store, although gold flakes, because you know you can do it super thin. And in Venezuela, I mean, they would price things in gold, silver, or dollars or what have you.
But with that said, that's why I personally think it's important, and Satoshi famously said this, you might want to have some in case it catches on. So I just want to emphasize those things to highlight the fact that I really agree with the diversification in the sense that you should probably have some Bitcoin in addition to the gold and silver.
So there's a very special place called the farm at Okefenokee. It's a 1,000-acre regenerative farm community about 45 minutes northwest of Jacksonville, Florida. The farm is a completely off-grid community. It has total food, water, and energy independence. Everything on the farm is 100% organic, and it even features wild boar and bear hunting. The farm at Okefenokee is right next to the Okefenokee National Wildlife Refuge, where you can do camping and canoeing tours. So if you're like me and you're interested in the self-sovereign lifestyle, then you can get your own lot on the farm at Okefenokee if you tell them that I sent you. Once you get a lot, you can build one of 3 custom cabin options. So if you value freedom, self-sovereignty, and living in touch with nature, then join me and my family. We have lot number 21, and we're going to be building a cabin there starting December 2025. To learn more about the farm at Okefenokee, go to okefarm.com and make sure to tell them that I sent you. If you're a Bitcoiner, you need the Orange Pill app. It's where you can connect with other sovereign individuals locally and globally. It's great for when you travel, to meet local Bitcoiners, to go to Bitcoin meetups, and to find local merchants that accept sats. No distractions, no noise, just real Bitcoiners. So download the Orange Pill app today and find your local Bitcoin tribe.
With your knowledge of monetary history and hyperinflation and currency collapses, what do you think the transition that we're going through looks like? Or what do you think where do you think we go and under approximately what time? Obviously nobody has a crystal ball, but you're much more knowledgeable than I am. And so what do you think is likely to unfold, or maybe just in an idealistic sense, what would you like to see happen?
Oh, well, you've asked me two different questions.
Okay, well, let's do one. So what do you think is probable to happen, and then what would you like to see happen?
Probable to happen. All right. I want to go back to the thing that you weren't quite sure of, because you need to get that piece in order to see this next piece.
Okay.
Okay. And that is, first of all, the whole monetary system is deflationary. That's why they keep lowering the interest rates to inspire inflation. When President Trump says he wants lower interest rates, it's because he wants to take on more debt and print more money.
Okay, I want to jump in there because you're nailing something that you're saying something differently that I see and believe. I could be wrong. I'm just a dude. But I think of another Jeff Booth quote, and the first time I heard this, it blew my mind. It like wired new neural pathways in my brain. I almost couldn't even believe I'd never had this thought before, because it seems so obvious.
Simple, right?
The natural state of the free market is deflation, meaning that if there's a demand for something and there's an incentive to produce it, we will produce it. And as the supply increases relative to the demand, the value of that good or service is going to decrease. And so in a free market, you have deflation. We have deflation taking place in the sense that we're increasing the amount of goods and services at a faster and faster rate. But we have an inflationary debt-based monetary system. And in order for the system to stay solvent, further debasement is required. So as technological innovation, AI, all the stuff that we have going on, we're producing more and more and more at a faster rate. Now, the problem that I see is that, let's say you take real estate and you take equities and you take government bonds. Let's say those are predominantly the basket of goods that collateralize the debt. In nominal terms, the value of whatever is collateralizing the debt has to be higher. But we're diluting the supply of these things. We're making more of them, and we're doing so at a faster rate. So we're pushing down the value in real terms, requiring the debasement of the currency to pervert that quote unquote prop asset prices up.
That is part of the design of the whole entire system, is that debasement.
Which is problematic. If we increase our productivity faster and faster, we need more debasement and is required for the system to stay solvent. That's why we have this proverbial runaway train.
First of all, the system is not solvent.
Well, obviously.
And by design, it is not solvent because the requirement is more debt. I want to go before we went into this system for just a second, because let's say that you're a country, I'm a country, and he's a country over there, right? Now, I'm a poor country, you're a wealthy country, is medium size. So I'm poor. I have to figure out not to be poor. So I create this great widget, and he can't really do too much because he's kind of like in the middle there, but you've got a lot of extra wealth. And you see this fabulous widget. And so you start buying my widget. Now, all of a sudden, I have more wealth. You have less wealth. You have more of my widgets, but you have less of your wealth. And he develops a new widget. So now I have wealth and I start buying that widget from him. And that's the way the system worked before, when we're truly on a free market system. If you develop the best widget, then the wealth is going to be attracted to you. And then because you have so much more wealth, that next widget, that wealth transfers. That's why things look like a hill and valley, right? In the economy.
That's the free
up
market
to this point.
Being in some sort of natural equilibrium or homeostasis like happens in nature.
Exactly.
Okay.
But now we come into this system, And the government wanted to tax you more, but knew on a gold standard that you would know about it and you would probably fight it.
Through debasement.
Through debasement, you don't complain about it. If it's an overt tax, okay, we're on the gold standard, I'm taking your gold.
Right.
You know about it. Corporations wanted to pay you less, but knew that if you were used to getting $10, you weren't going to accept $5. However, through inflation in both places for the government, there's your inflation tax, because at least in theory, they get you to use the money first when it has the highest level of purchasing power. And then that trickle down theory, by the time it comes to you and me, it has a whole lot less than it did originally. But
dilution.
The moment that we get it, it has the highest level of purchasing power that it's ever going to have. And then it's going to go down from there.
So the recipients of the newly minted currency have an unfair advantage in the marketplace.
Well, yes.
Yeah, okay.
100%.
Because they're getting it before it's entered into the economy. So they're buying goods or services with that newly minted currency before it's been distributed all the way through the marketplace, and prices are adjusting accordingly.
Well, yes.
Okay.
Prices are adjusting accordingly, but the other part of that is, since the money's created from debt, now we're paying interest on that debt.
Which is why the whole thing is entirely insolvent, because there's not even enough currency within the system to pay off all the debt.
Well, the design is, look at the debt charts at the Fed, right?
Yeah.
The design is never to pay it off. It's constantly compounding. And then interest rates are the tool to regulate the rate and speed of that inflation. So if you look at the pattern of that, then you can see that, what are we trying to fight? We're trying to fight we're trying to fight deflation. All of that debt is deflationary. It pushes the price down as the value of the currency goes down. But in nominal terms, it pushes the value up. People aren't paying attention to
optical illusion.
Completely. So we can't just go based on what our experience has been since the early 1900s. You have to look further back. But when you have deflation, if you're battling that, you have to create inflation.
Yes.
Okay. So that's why I say, very simply put, the only way to fight deflation is with inflation, dropping those rates, inspiring people and corporations and governments to borrow more.
With fractional reserve banking, is going to expand the currency supply.
Voila.
And keep the asset prices propped up. Those assets, whatever baskets of assets that's collateralizing.
Correct. It doesn't matter.
Yeah.
Right. Exactly. And I want to come back to collateral in a second.
Okay.
So that actually, when you think about it, makes it super, super easy to understand. The only way to fight inflation is with deflation. The only way to fight, and we saw that when the inflation numbers were running hot enough that the people started really going, right? That's when, what did they do? Powell raised the interest rates.
Slows down the creation of new currency.
Right.
It's still happening, but it's just at a slower rate.
Correct.
Mm-hmm.
It is that's the goal, is to let it happen at a slow enough rate that you don't notice it, and therefore you don't change your behavior. Okay. So it's critical that we all understand that. And it's really simple. The only way to fight inflation is with deflation. The only way to fight deflation is with inflation. The problem that we're at right now is how much money has been created. Really, they had it slow enough until we hit 2008, right? When 2008 hit, I remember everybody up in arms over the $800 billion that the Federal Reserve had printed to give to the banks.
Which nobody would even blink an eye with $800 billion today. Yeah.
Exactly. So that's part of it too, is that we get used to it. Right? Remember at the beginning of President Trump's term, and he was going in and changing all of these things, lickety split so fast, and everybody's going, and including me, like, holy cow, this is so fast. I am not convinced that nothing got damaged that we have not really seen the impact of yet. Okay. Because it was very willy-nilly and haphazard. It's a system. While I 100% agree with smaller government and I want them less in my business, I think you still need to be a surgeon in the choices.
You can't just flip the light switch off. Get rid of the government. Couldn't happen.
Yeah.
You'd have Mad Max apocalyptic situation. It'd be bad.
And I don't know, when you ask me what's coming up, I don't know that we won't have that. Okay? Because that is actually what's happening. And as a stockbroker in the 1980s, all the talk was about globalization. Because I remember when we did manufacture stuff here in the US, right? But it was all about globalization because the corporations could go elsewhere, particularly China, right? And peg the Chinese yuan to the US dollar. Corporations knew how much profit they were going to be making. And of course, labor was a lot cheaper in China than it was in the US. So the manufacturing flowed there. We saw the problems with the supply chain in 2020 during the COVID era. And now we're deglobalizing everywhere but financial. This is not going to be an easy transition. You cannot just flip a switch from one to the other. Is it necessary? I can remember as a young stockbroker with all of this with all the globalization talk on, I can see a few problems with this. I mean, I used to go to the garment district in New York and buy clothes. It was a great place to do it. That was outside of Paris. That was the fashion capital of the world, right? My boyfriend's father worked in the garment district. I wish I still had that lamb coat that I bought there because it was a great coat, but they shipped all the jobs away. Now they're bringing them back, which I think is a very good thing.
I agree.
I think we really need to have that for a lot of reasons, but it isn't an easy transition. And that's really my point. So since the only way to fight deflation is with inflation, and the only difference between inflation and hyperinflation is the speed of that inflation, and the only thing that really keeps that level under control is the confidence of the public in the system. When we get our next bout of very rapid inflation that is so obvious to the people because they are stretched just about as thin as they can make it. When you see people having to put it on 4 payments to feed their family, that's a huge problem.
Yeah, every time I buy something online, it's like, oh, do you want to pay this in 4 payments? I'm like, what? I'm buying 2 t-shirts. What do you mean? Do I want to finance it? This is crazy.
But you're talking about t-shirts. I'm talking about food.
Yeah.
Right? I mean, that is, you can live without t-shirts. You can't live without food. So that is definitely an indication of where we are in this trend cycle. And I go back to the confidence. If I'm only looking at one thing, okay, I'm going to look at that consumer confidence and the public confidence and the inflation expectations. Because when those plummet and we break the support level that they're sitting on now, okay, the most likely next outcome is for a rapid loss in that confidence. That then pushes us into a hyperinflationary depression. And that's what I see coming in the future. And that's why local community is critical. Because
Totally
I've
agree.
had the time to make sure that I have surety in food, water, energy, security, barterability, wealth preservation, community, and shelter. I've done that, but I've been working on that piece hard since 2008. I don't know too many other people because they're just living their lives. It got really bad, then it got not as bad, and people go, oh, it's back to normal. It's not back to normal. The currencies never regain their purchasing power. They don't. Look at history. Is this time different? Maybe. Probably not.
I don't think so.
Probably not. So that's what I see. And time-wise is always really challenging. But that's why I'm paying very close attention to that confidence number, because once we break below that level,
which is M2V, you're referring to that.
well, that's where you'll see a huge spike. I don't
Okay.
mind a little spike. It's a pattern shift, right?
Right.
That's what I'm always looking for.
Because when the velocity increases, that's indicating a major loss in confidence.
Yes, it is.
Okay.
But it's also in the consumer confidence numbers. And we're seeing this shift that's happening right now, like we're talking about with those 4 easy payments. But you have enough of those 4 easy payments, they're no longer easy payments. We're seeing a rise in default. But if I were looking at just 2 things, it would be the confidence levels and the monetary velocity. But the monetary velocity already gave me the signal, right? Whenever there is a pattern shift, you don't need to know what that means. You just need to know that something's happening. There is a change, and depending upon what it is, it's either a good change or bad change. I saw that in 2007 when the dollar fell to its lowest level ever against its trading partners. And I'm pretty sure it was July 9th of 2007. And I say that because I went on a sibling weekend, which was not something I did. I don't talk to my family much about this because, they just think I'm woo. They don't anymore. But at that time, they did think I was just woo-woo. And because I was with them, I said to them, you know what? And I was really freaked out. I didn't even want to go on this thing because it had just happened. But I decided to tell them that when we got back, I was going to tell my mom to liquidate all of her stocks and just sit in cash. And she had gold and silver, just sit in cash for a while. And so I told them, and they're like, oh, you're just a doom and gloomer. Oh, the economy is the best it's ever been. And we're hearing a lot of that now. Oh, this is going to make the economy really strong again. You cannot have a strong economy with a weak currency. And the value of our currency is 0. And it's 0 because it doesn't cost anything to create. This is not rocket science. You just thinking about it logically. And so that's the reason why interest rates are being dropped, is to inspire inflation. And what they're really telling you is the dollar is too strong and we're going to take the value down. But what happens when we get to 0? That's my eternal question. What happens when we
have
get
to transition
to 0?
into something else. Yeah.
Voila.
Mhm.
Voila. And it could be that Bitcoin does end up being the new monetary system. But I'm going to tell you, in terms of dollars, it'll be a heck of a lot cheaper than it is right now, even presuming it survives it, because I know that's the direction that we're going. I'm not in denial about any of this. I just don't think it's going to be a smooth transition.
Yes, I share that concern. I definitely do.
And that's the point of the gold and the silver and having the whole strategy in place. That really is. And the layered approach where, we're taking into account all of this stuff. So even digital gold makes sense. The gold backs makes sense. Having cash that you know is going to 0 makes sense. Having your barterable gold and silver makes sense because things get very, very local for a while. They truly do.
Yeah. So radical self-responsibility, self-sovereignty, communities, you got to be vigilant.
Everything.
You need to be prepared.
And you need to bring different skills and talents and what you have. So it's not just, it's really, I have certain skills and talents. You have certain skills and talents. What we're doing today is bringing those different things together for a minute and learning from each other and helping each other and supporting each other. And that's what a community does. So maybe I have a garden so I can, I tell this story. She denies it, but I'm going to tell you right now, this is 100% true. She's laughing. The whole world knows about this. I was at a gas station. I remember the exact day and moment. And this is 2020, right? When you couldn't get toilet paper. And she called me up, and yes, you were freaked out. She was completely freaked out. Oh my God, I need toilet paper. I can't get toilet paper. I said, don't worry. I got plenty of toilet paper. I can help you out. That's part of being in the community, that you share with each other, right? You share whatever gifts that you have, because that woman has more talent. She's the president of the company. Jacqueline Dawson, for anybody that really wants to know it. But she's got tremendous talent that has a lot of value. Everybody does. Every single person has something fabulous and wonderful that they bring to this planet. So for me, that's what community is about. I'm getting chills. But for me, that's what community is about. You bring what you have, whatever that is. This is a fabulous time to learn new skills. I could actually even lay irrigation if I needed to. Do I want to? No.
You can go on YouTube and learn anything you want. It's a beautiful time in that sense.
Exactly. But the importance of community, local, cannot be stressed enough. And the community on a global basis, we come together. One person, what can I do? I'm one person. But together, we can do anything. And that would be even getting Bitcoin in the system right alongside gold and silver, right?
Well, I would say we don't want Bitcoin in the system. We would hope
as part of the monetary. If it's the money of the system, if it's the global money, then it's got to be part of. But it's still going to be part of a system.
Yeah.
The old system's dying.
Yes.
I'm not saying you put this in and now magically everything is okay. That's why I'm saying this is not going to be an easy transition. It's not.
I totally agree. Yeah.
Hyperinflationary depression. That's what history says. With 80% on average, 80% of the population ends up in abject poverty. I didn't say 100% though.
Yeah, it looks like we are moving that direction. We have one spending bill. I don't know if I'm correct about this, but it's my understanding that we're likely to get 2 more this year. What does seem evidently clear is that they are going to print like crazy.
They have to. The one spending bill is supposed to add, and I love this because they always go over 10 years, but who looks out 10 years, right? 3.2 trillion plus all the not raising the taxes, which I benefit from. So, but you can't just look in the mirror and go, it's all about me. It doesn't matter as long as I'm okay. And that's what a lot of, unfortunately, divide and conquer. That's what a lot of people do. As long as I'm okay, I'm jumping on this bandwagon. And I think we have to look in the mirror and go, oh, this is a much bigger battle than that. This is a battle for our future, and even though I think I'm going to be here another 30 years, I'm done after that, but my kids aren't.
We're only individually okay in the truest sense if everybody else is okay.
Voila.
We need each other.
Very well said.
Yeah, I think there, in some sense there is a they, but really it's just us. We're just a bunch of humans sharing this reality together, and we need to figure out how to get along, and we need to figure out how to get to the other side of this with as little damage as possible.
And we allow those that are in power, that 1%, we 99% allow that 1% to control us. Let's not do that.
And unfortunately, most people do so unknowingly, which is one of the things I love so much about your work and what you're doing. And on that note, we've been going for quite some time. Yeah. So any final thoughts? Where can people find you? You have Zang Enterprises. You're helping educate people on YouTube. I was looking at your YouTube channel to just
prolific.
Absolutely. You're on Twitter. So yeah, where can people find you?
Everywhere.
Last words, last pieces of advice. Well, we could go on for so long, but
we could, and we'll have to continue this again.
I would love to.
But I would say stop procrastinating. For those people that have just, their life seems okay right now, and so they just kind of stay on hold and wait and see what's happened. History is a great guide for what the next most likely outcome is. And if you learn how to recognize the patterns of an aging currency and what that next most likely outcome is, then you get to be in the right place at the right time with the right asset, because I know everything sounds doom and gloom. It's not doom and gloom.
There's opportunity in everything.
Incredible, especially in crisis, especially in transition. And I gotta say this because historically, really, what gold and silver and the importance of having that in your portfolio is that when one system dies, another one is born, and this is your bridge, proven bridge.
It's unchanged.
Exactly. From one system to the other. And
that thesis applies to Bitcoin. It doesn't have the historical track record but that gold and silver does.
And that's all I'm waiting for.
Yeah.
Honest to goodness, that's all I'm waiting for. And
Yes.
I hope that you're right, because we don't want to go backwards. We want to go forward, but we want to do it on a very solid foundation. And we've got some testing here. I wish that it could hold energy to be used over and over and over again. But just keep in mind, gold and silver has the broadest base of buyer. We are in a war. You can go in with dollars thinking everything's hunky-dory, and then what do you have? You have maybe a penknife, maybe not even a penknife. Gold is a bazooka. And this is what they reset the currency against. And that's because of its demand.
Yes. Oh, well, this has been a lot of fun.
Yeah,
Thank you so much for your time, all of your wisdom, insights, good energy, and openness too, to hear some of my thoughts about Bitcoin.
Absolutely. I mean, I love this because I've learned a lot from you and things that I'm going to think about and digest and see.
It's fascinating stuff.
Very.
It really is. And I have yet to meet anybody who has gone down the proverbial Bitcoin rabbit hole who has then decided, no, this is nonsensical. And the Bitcoin community globally is very adversarial in their thinking, outside the box thinkers, and aligned values, hard money. We want to separate money from the state. We want to liberate, humanity from corruption, the shackles of scarcity, violence, all the things. So,
well, the way to do that, honestly, is to have a tool that the public can hold those that are making these choices and decisions for us, hold their toes to the fire. And I don't see why we can't just vote what we think with blockchain and eliminate a lot of these politicians.
yeah.
What a concept. I don't ever hear anybody talk about that.
That's a whole nother thing too. And,
We'll
and
have to have that
that could be
conversation.
something too that's built in a layer on top of Bitcoin. Bitcoin has a lot of potential. And yeah, we definitely need to do this again. I don't want to do this sometime when Robert is here.
Love that.
He's what, in my humble opinion, maybe one of the world's best at speaking to these things. So
Excellent. But you made me come to Florida before I could talk to you.
yeah.
So it might have to wait till I come back again.
Well, we do Zooms from time to time, and this one might warrant a Zoom. So thank you so much. This has been
Thank you,
tremendously
Eric.
fun.
This has been fabulous.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.